Any of these cyclical companies that are showing signs of life, showing signs of recovery, of the earnings we saw this morning are going to help. But then, of course, the market is still grappling with the fact that Europe is going to reverse when it comes to lockdown. I see we have an opening price in the FTSE 100, Jonathan.
Well, let's get this market open. Give it time to breathe. The prices establishing themselves on the left side of the GMM screen. I want to start with the bond market before we get to equities. Two-year yield in Italy up around about a basis point. It was bad yesterday. Yes, but relative to what we might have seen 9 months ago, I imagine Christine Lagarde was happy with what she saw in the bond market in the last week. Let's hear from her a little bit later on this afternoon. The German two-year yield still pinned to the floor, though, and that's the story. We are not getting a rate hike in the ECB for a long, long time, and maybe even we'll get another cut. We're negative there, negative 80 basis points on a two-year yield, and coming in another basis point. In foreign exchange, just a little bit of firmness starting to come through sterling. Cable back north of 130, but euro-dollar just can't get it done. A breakdown in the last 24 hours, some dollar strength this morning when we walked into the office. We had a bit of dollar weakness. We reversed that, unwind it for euro dollar, 117.40. So let me whip through the equity market for you at the open about a minute into the session. The FTSE dead flat, unchanged. A small bounce on a FTSE MIB over in Italy. We advanced 0.5%. A small bounce on a CAC 40 over in France as well. We advanced there by about 1/3%. That's the story in the equity market off the back of real concern across the continent. France locking down for up to a month. Chancellor Merkel speaking in the Bundestag right now, cutting restaurant openings, bar restaurants for a single month. The story out of Germany and France at the moment, Anne-Marie, really difficult.
Yeah, it is really difficult. And Jonathan, I was looking at the Bloomberg Intelligence projections of what this means for the economy, and you're going to see serious pressure on both of these economies as they shut down. For many of them, the only thing that's going to be really up and working is going to be the schools and things like some places of work. I know we don't want to speculate, and you and I had this conversation this morning when you walked into the office, but Italy is considering another regional lockdown. Jonathan, will Italy be next? That's a crucial question.
Well, I think that's a question for the market, Anne-Marie. And the market obviously is in the business of speculating. The news that we've got to deal with is what we heard yesterday from France and Germany. You assume these are holding patterns through the rest of winter, and you wonder what the holding pattern looks like in Spain and Italy as well. Here in the UK, do we continue with what we're doing in the United Kingdom with this regional approach, or do we do something more severe? And I think they'll be the questions that percolate. And not just in Europe, Anne-Marie, I think in the United States as well. Let's just sit on that for a moment. Yes, New York, California aren't in the place they were 8 months ago, but other places are. Illinois, Chicago.
Yes, certainly. One I've been watching is Wisconsin, Jonathan, because this is a crucial battleground state. We are 5 days to go to the U.S. election, something we haven't even been able to have a good discussion about because of all the news flow out of Europe. But Wisconsin is one of the U.S. states with having the most coronavirus cases per capita, and it's a swing state. So COVID is going to be front and center on these voters' minds as they head to the polls. And of course, that is going to be whether or not they agree that the President of the United States dealt with COVID in the manner they would have liked to see, or they think that the next year, which we know COVID is not going away, should be given an opportunity to another individual, Jonathan. And we just have Merkel there coming in, if you're just tuning in. She is coming into the Bundestag, and of course this comes as Germany imposed a 1-month partial shutdown. Jonathan, this starts on Monday.
3 minutes into the session, we got an opening price on a DAX. We advanced by 0.75%. We have a bounce. It's just not a major one after the losses of the last 3 days. The CAC 40 up by about 0.6%. The FTSE advancing by around about 1/3 of 1%. S&P 500 futures up by around about 1 percentage point. Let's turn to Europe, to Berlin with Chad Thomas, Bloomberg's very own and one of our finest. Chad, let's just start with Germany, as it's unfolding on the screen right now with Chancellor Merkel and Wolfgang Schäuble. How is the latest restrictions? How have they been taken by Germany?
Hi, Jonathan. Good morning. Well, it's really interesting to see what a difference a couple of weeks makes. So Chancellor Merkel a couple of weeks ago was trying to tell state leaders, we need to lock down, we need to put in more restrictions, and she got a lot of pushback and essentially at that point gave up. Now, fast forward 2 weeks, and here we are today, and basically Merkel's plan that she came out with yesterday morning, or her proposal, is exactly what they're going to implement. We'll be hearing more from her in just a few minutes in the Bundestag. We'll be listening for sort of color on just how bad she thinks the situation is in Germany. One thing that stuck out for me yesterday when she spoke, she said 75% of cases in Germany, they no longer can contact trace where the person got the virus from, and this is why they're going for these very strict measures now here in Germany. Another thing that stuck out, she said, we're going to reassess this in 2 weeks' time, and then we will see where we're at. So, yes, it's for now a month, but if things don't get better, we can expect that these restrictions will stay in place for potentially weeks more to come, if not even more restrictions put in place if things don't improve.
Chad, we do see Angela Merkel now, the Chancellor of Germany, taking the podium at the Bundestag. She says we are in a dramatic situation, Chad. Give us a sense of what locally Germans are feeling. You're seeing the local press. We saw protests in Italy. Is there COVID fatigue on the streets in Germany?
There certainly is fatigue here on the streets, and there certainly is also some pushback, Emery, to these measures that are being put in place. There is a sense of fatigue. A lot of people are wondering about, why are some measures being taken and others are not? For example, places of worship are not going to be closed. Merkel said that was important to her not to do that. But there is a minority at this point, I would say, who are pushing back. There still is definitely, though, a majority in Germany that do support the measures and what needs to be done to get things back under control here.
Hey, Chad, great to catch up, sir. Chad Thomas there in Berlin. If you're just tuning in, Chancellor Merkel addressing the German parliament right now. The headlines as follows. We are in a dramatic situation. Health authorities are near the limits of their capacity. This address following the latest restrictions coming from Germany in the last 24 hours. Health authorities are near their limits. That is not what you want to hear when we're at the back end of October, going deeper into winter. The price action speaks for itself over the last week off the back of this news. Alan Higgins now of Coutts, the CIO, joins us. Alan, let's just start right now. How you process what's unfolding in Europe in the last week?
Yeah, morning, John. Nice to see you over here in England. Yeah, look, it's really, really tough news, isn't it? I mean, it's not as bad, thankfully, as March, April, in many senses, despite the strains on some hospital systems that we're seeing. But it's very bad news, and turning it to, if you like, the day job, the markets, what we have to remember is that if we're looking at equity markets, they are longer-term securities, longer-term cash flows. So I think the lesson of the March-April period is, one, the stimulus, and whether we see something from the ECB, more likely words, some more from the US, one, stimulus, but also the market very quickly focuses on the long-term cash flows. And of course, we saw that dramatically with the tech sector in the US and elsewhere in China, because those are very long-term cash flows. So really tragic news here in Europe from a health and society point of view. But from a market point of view, the market will see through this. And of course, the vaccine is to come. We will get a vaccine. There's a very high probability of multiple vaccines, and that will lift spirits, but that's something for later in the year.
Alan, I want to turn to the price action at the moment, about 8 minutes into the session as the Chancellor addresses the German Parliament. Equities are positive off the back of a really brutal 3 days. Euro-dollar rolls over, though. Euro down by about 0.1% on the session. Euro-dollar 117.33. Alan, you mentioned vaccines, and you talk about a different kind of outlook compared to the kind of discussion we would have had 8 months ago. For investors right now trying to establish a playbook, how different is the playbook now for you compared to the playbook back in spring of this year?
Okay, so we know a lot more about the vaccine, and the treatment is a lot more effective. So thankfully, the strain on the hospitals, although they're increasing, is less, one. Two, in terms of the playbook, is that on the vaccine, get ready for cyclical stocks to perform. We've seen tentative signs of it. Look, the growth quality space remains attractive longer term, but what we do know from history is that when we do get a fully fledged economic recovery, most likely associated with a vaccine, you want to be in more cyclical stocks, and that's where we could see a really, really sharp bounce back. That's probably something more for next year, but I would look, as investors, I'd look to be fairly balanced between, if you like, if you put it very simply, the tech and growth darlings, and taking selectively some exposure to the cyclical areas of the market.
Good morning, Alan. Thanks for joining us. It's interesting you want to go in on the cyclicals. I know you say we know more now about the vaccine, but health professionals have warned us time and time again the winter is going to be rough because obviously more people go inside. Jonathan and I have spoke about a number of times. It's not even flu season. And last night, Dr. Anthony Fauci says we're not getting a vaccine in 2020. The earliest is going to be January 2021. So do you still maintain that this is going to be what you look like seeing more that we know, and you're not so bearish yet? And I'm just trying to figure out where exactly for you would be that moment.
Okay, so for me, Anne-Marie, it's a very good point. It's what we know about markets. It's the news on the vaccine rather than the distribution on the vaccine, I think is important. And the markets will look ahead. But where you're right and where we agree with you, you've got to be super selective in terms of where you go in terms of cyclical value stocks. And we have been. And look, to be clear, we still have an awful lot of exposure in the growth quality area. I guess the message I'm giving to answer, Jono's original question is that we're mitigating that now by taking selectively some cyclical exposure. So, for example, the most recent cyclical exposure we bought was US bank exposure. Obviously not performing right now, but that is a cyclical sector that could do well.
Alan, I just want to turn to the headlines of the moment in the last couple of minutes for people just tuning in around the market open. 10, 11 minutes into the session, we advance about 0.6% on the DAX. It's a muted bounce back from the last 3 days. Chancellor Merkel addressing the German Parliament after announcing new restrictions in the last 24 hours on Europe's largest economy. The headlines from Chancellor Merkel as follows: we are in a dramatic situation. Health authorities are near the limits of their capacity. That's the analysis from the German government at the moment. I think we're all interested in the fiscal response. The government will help companies hit by restrictions. Chancellor Merkel was saying the government is to present proposals on aid in the coming days. And Anne-Marie, I think this is key right now as we hear from Chancellor Merkel, Macron yesterday evening, and other leaders across Europe through the next several weeks on this situation. How do they respond on the fiscal side? And will they follow up with the same aggressive fiscal stimulus, the aid to offset some of this pain like they did 8 months ago?
Yeah, it's a really big question, Jonathan, especially considering you're going to have Christine Lagarde speaking today, and she has pointed out a number of times that it's that double track, that double bullet. You go in with fiscal stimulus hard as well as monetary policy. The other question, Jonathan, of course, is that the European Recovery Fund has not been distributed yet. We have to wait for the European budget. Does this now, Jonathan, put more pressure on them to get that done?
I think it does. And Alan, I think it's absolutely remarkable, sir, to turn to you, that we still haven't ratified this thing. Here we are entering November, And that recovery fund hasn't been ratified, Alan. And I think for many people looking at Europe, they kind of pushed aside that euro breakup risk, just pushed it to one side. Do you think, Alan, we start to conflate the two issues again? Fiscal integration, the worries that maybe we don't get it done.
That European Recovery Fund has to come through. I think you're right. Without that, I think that the leaders were quite correct. You were potentially on the verge of a breakup of the union because with certain countries, obviously Italy and Spain, in desperate situation, either they're all in it together or they're not, and that was very, very positive. And I noticed that Italy is talking about spending some of this money in advance, which seems sensible. I mean, but the bottom line in terms of government support, I think you're right. Step back a bit. Look how low government bond yields are. It's interesting because looking at Joe Biden potentially coming in, I've been comparing his presidency with Clinton. And you may remember the famous quote from James Carville, how the bond market intimidates everyone, when bond yields were 6, 7, 8%, up to 8% in the US. And so financing was difficult. Look where we are here in Europe and globally. Financing is so easy for governments right now. And so any idea of austerity, no chance. The governments will just borrow, continue to borrow to basically support the economy.
Alan, I just want to bring some updated headlines coming from the Bundestag. Angela Merkel speaking there. She says, if we wait until ICUs are full, it will be too late. She also says every citizen must contribute to checking virus spread. She's saying this is a very dramatic situation as she kicked off that speech. Alan, given what is going on in Europe, do you think this solidifies Europe's trajectory to a double-dip recession?
Yeah, so I've seen some forecasts for Q4 German GDP at minus 0.5%. I mean, it's not as extreme. The lockdown is not as extreme. It's pretty extreme, compared to life in 2019, etc. But it's not as extreme as what we went through in March and April. I mean, little things like hairdressers are open, and of course, important aspects like schools and most industries open. So it's not quite as extreme. But yes, it looks like negative GDP. But Anne-Marie, quite honestly, a small dip in GDP compared to what we went through in Q2. I mean, the markets can live with that. Don't forget, the markets discount longer-term cash flows, and I think that's we learn from the markets all the time, and that's what we learned this year. We learned it dramatically in the tech sector, but even in the more cyclical and value stocks, the market is looking through to either buybacks or resumptions of dividends, etc. And because that, when you invest in a stock, you receive longer-term cash flows, right?
16 minutes into the session, Alan, we are negative on the FTSE 100, barely positive on the DAX, up by a third of 1%. We are negative on the IBEX 35 over in Spain and Italy, up by around about 1/3 of 1%. Chancellor Merkel addressing the German parliament, saying that health authorities are near their limits. We cannot wait until ICUs are full, or it will be too late. The situation is dramatic. Switch up the board in the bond market. Here in Europe, the situation as follows. A bit into the bond market, yields negative 62 basis points on 10s. Over in Italy, sell-off yesterday, but a bit of stability going into that ECB meeting. We are not out of the woods. The jury is still out on the Italian bond market as to whether this market can behave like a true sovereign. Over to you, Christine Lagarde, a little bit later. That's the bond market price action. Let's get some stocks on the move. Here's Danny.
Don, it might be a mixed picture when it comes to the regional indexes, but certainly some decisive moves underneath the surface. One of the biggest gainers today is ASM International. Now, this chip maker, important here in that it beat in its third quarter as well as its fourth quarter projections. Now, that's notable because Samsung yesterday out with its earnings where it said it expected a profit decline. So the fact that we're getting a almost 5% gain for ASMI is really, really notable in that environment. Orange also up 4.5%, on track for the biggest gain since March. It said that it would give shareholders the right to return to a 70-cent per share annual dividend in May. Again, the dividend story continues to be important for investors who don't have those bond yields to turn to, looking for it in equity markets perhaps. It also said that it would raise its interim dividend to 40 cents from 30 cents. Nokia also falling here after sales miss and guidance cut. John, Anne-Marie?
Danny, thank you. Alan Higgins of Coutts, the CIO, still with us for a final thought. Alan, we saw some spread widening in US high yield yesterday. Credit in Europe, selectively, starting to get hit, smashed around. It's been really difficult to find income. Alan, as you look around over the last couple of days or so, what have you found? Have you been buying?
Not yet. There has been a sell-off. I mean, there always is a sell-off in credit when there's a dramatic fall in equities. I would say high yield actually held up pretty well yesterday, given the circumstances. I mean, for us, in terms of risk-taking credit, we've had a lot of reports from the European banks. For us, it's bank credit. Taking a view on the solvency of national champion banks remains one of the best kind of risk-taking trades that's out there. So financial credit. For us, in terms of defensive strategies, is treasuries. Now, super interesting. I mean, treasuries didn't perform yesterday, and government bonds in general. So maybe it's a message that U.S. treasuries have become a bit like bunds in the sense that yields have got so low, at least treasuries in a U.S. context, that they no longer have that kind of, to put it as our geeks like to call it, negative correlation versus equities, so that we get the favorable performance of treasuries. But we are in treasuries as a hedge, but it's a bit of a wake-up call what happened yesterday, certainly.
Wake-up call for us all. Alan, great to catch up. It's been too long, sir. Alan Higgins there, the Coots CIO.
Yeah, nice.
Coming up on this programme, lockdowns are back in Europe. We'll bring you the latest and all the market reaction. The price action looks like this. 19 minutes into the session, we are struggling to generate a bounce. The Stock 600 are raising again to the morning, trading flat. The FTSE negative by 1/3%. The DAX up by 0.14% on a session. Barely positive. The enthusiasm for that bounce, it's not really there, is it? From London, alongside Anne-Marie Hordern, I'm Jonathan Ferro. This is Bloomberg.
Etwa 1000 lang erschienen den meisten von uns die mittlerweile täglich erreichten Werte von deutlich über 10.000 Neuinfektionen.
as Chancellor Merkel addresses the German parliament this morning. We inch lower there, a weaker euro by 0.1%, and dollar yen unchanged with a 104 handle. Joining us on the price action this Thursday, I'm pleased to say we can turn now to Jörg de Vries-Hippen, Allianz's Global Investors CIO. Jörg, great to catch up, sir. Walk me through your reaction to the last couple of days and what you're hearing from Germany, France, and elsewhere.
I would say it seems to be Halloween on the market. And I would say due to the situation that we are completely in, I would say, in the corona pandemic, in the Brexit discussion and in the elections in the United States, I would say all that things is too much for the market. They react on that things after having a good summer. I wonder a little bit because if I see companies' numbers coming very good, then market is directing different. But I would say so long we have these three risk factors with us, I would say everybody will concentrate on Halloween.
Jörg, very good morning to you. Angela Merkel speaking this morning in the German parliament right now. She says the government will help companies hit by restrictions. What do you think we'll see in Europe in terms of fiscal policy coming down due after the second wave?
I would say the first thing what we will see is something like first aid. If we see in Germany at the moment, Chancellor Merkel is talking about 75% of the revenues of last year's for some of these things, for the pubs, for the restaurants, for artists, something like that, to help them about that things. That is another 10 billion out of the budget they have to put into that things. I would say in France it has to be happen the same in other countries too. So I would say due to the second wave, I expect more stimulus coming from Europe, more stimulus is coming from the European governments.
Jörg, we've got a bit of time with you, but a final question in this part of the conversation, if I may. I want to understand how you're set up going into winter and whether you think Europe's present is in the United States' near-term future and what that means for your capital allocation decisions.
I would say for me it's at the moment key that the next 2 weeks markets are full of, I would say, risks and other things. In the next 2 weeks, it's maybe better to hold your money on board. But I would say you get now opportunities for the next months to buy maybe stocks where you like to have. So look for opportunities, but see the risks.
Jörg, stick with us, won't you? Jörg de Vries-Hippen there, Allianz's Global Investors CIO. Chancellor Merkel addressing the German parliament in the last 30 minutes or so. Your headline, the health authorities are near their limits. The situation
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Chancellor Merkel, we are facing 4 long and difficult winter months. It's been a difficult 3 days in this market. A cautious tone coming out of Europe. Your equity market bounces back by a mere 0.1% on the FTSE 100. On the Stock 600, advancing 0.25%. If you're tuning in stateside, Chancellor Merkel addressing the German Parliament. Futures still positive on the S&P, up by 0.9%. Busy evening in America. Big earnings after the close. Apple, Amazon, Facebook. Switch up the board. Cross-asset. A euro going into the ECB meeting a little bit later with President Lagarde. Euro dollar, Anne-Marie, 117.32. Every minute that seems to pass just adds a little bit more pressure, Anne-Marie, on Christine Lagarde later.
Yeah, it certainly does. She's going to have to, what many are saying, strike a different tone, really hint to that more is coming in December, given what's going on in Germany and France. We do see a little bit of weakness, John, on the euro dollar, but everyone's talking about long-term dollar weakness. At some point, we will get fiscal stimulus out of the United States. But if you're Christine Lagarde, you must like seeing a little bit of weakness on that euro. It's going to help those exporters, which already, Jonathan, we've seen pick up in Asian demand. But can they go anywhere else in the world?
Anyone looking for some dollar weakness got hit hard in the face yesterday by some real dollar strength through G10, 3EM as well. In the price action, lift the lid on the indexes. Let's get straight to the sector price action and have a little look at where the financials are. We're down again, bottom of the pile on the Stock 600. The banks are struggling. Credit Suisse is pledging a buyback. Standard Chartered signals a return of payouts. But for European banks, the outlook on rates, I think, is what is really dragging down the valuations of these companies. Elisa Martinuzzi joins us now, Bloomberg opinion columnist. Elisa, always great to get your view on things. Can you just walk us through the general theme from what we're hearing from these European bank CEOs?
Sure. I mean, we're sort of, about a third, I would say, into the earnings for the financials. And what you've seen is two major themes you've had. On the one hand, very, very strong trading income. So clients, both on the wealth management side and on the investment banking side, trading intensely with the banks and therefore driving those revenue lines. And at the same time, you've seen banks provision less for potential bad loans than people had been expecting. So after a first half during which, banks put aside very large sums for potential bad loans, these reserves were not as large in the third quarter, a signal that, in the months that have passed, there has been perhaps greater optimism on the outlook for the economies. Now, of course, these results are coming in the midst of fresh lockdowns. So, it's unclear whether this is going to be, whether the worst is truly behind them. And as you say, there's going to be pressure on revenue from interest rates being at record low levels, and that's not going away, and you're seeing that, that pressure in the numbers.
What about these de facto bank dividend bans? Will a further delay in them do more harm than good?
Well, it depends on who you speak to, of course. I mean, the regulators are in a dilemma. On the one hand, you have banks that are reporting stronger capital, bigger capital buffers. They're able to set aside funds to repay, to return to shareholders, be it through buybacks or dividends. On the other hand, some of the improvements in banks' balance sheets are the result of regulatory lenience and regulatory, some softening of the rules. And equally, regulators are concerned that we're not through the worst of the wave yet of the pandemic hit on the economy. And if you look at some of the projections, the ECB estimates that in the Eurozone, bad loans could reach 1.4 trillion. That's euros. That's 3 times what banks are facing at the moment. Therefore, they're very concerned that over the long run, the banks may not have the capital to withstand the hit from the pandemic and pay dividends.
And the report from the ECB in the last couple of days, they're already tightening up lending standards. Elisa, great work as always. Always enjoy catching up with you. Elisa Martinucci there, Bloomberg opinion columnist on the latest with the financials. 34 minutes into the session, your stock 600 up by about 0.25%. Every single sector is positive today, marginally, with the exception of the financials. The banks are down by about 0.5%. The outlook really difficult. You saw the charts just moments ago. Credit Suisse down by about 32%. Over the last year and really struggling to generate a bounce. Still with us, Jörg de Vries-Hippen, Allianz Global Investors CIO. Jörg, how difficult is it to be invested in the European financials right now?
Difficult because any things you think are not working. I would say we've bought insurance companies for the dividend, but even there is now the question behind. You couldn't buy banks for the dividend because banks looks good, but you discussed already about that. Regulators will maybe not allow. And don't forget, the banks looks at the moment extremely good because governments take the biggest burden of the crisis at the moment. A lot of companies normally has to go, to make it clear, bankrupt, but due to the government aid, they not do that at the moment. And that is at the moment the advantage of the banks. No question, banks' results looks very good. But it needs a long time before we can build up the trust again into the banking sector.
What about the de facto ban? We were just talking to Elisa about this. Do you think the ECB will lift that ban on banks in December? Or given the fact that we do have Europe going in reverse with these lockdowns, on the surface, does it look bad if they allow banks to pay out dividends?
Even if the banks are able to pay dividend, I would say, for which politician can it be a positive sign at the moment to allow banks to pay dividend? There is the issue. I would say we are at the moment in the second wave. Maybe the second wave is more bad as the first wave about that things. I would be very cautious as politician or as the ECB to go that way and allow them now already to pay dividend, even if I wish that step, but I'm very cautious to expect that step.
And just quickly, if we could bring it back to Christine Lagarde. She's going to be speaking at 1:30 time. It's going to be in Jonathan Farrow's U.S. opening show. What do you expect her to hint at today? And then for December, when they start to add that, does that go into the old program under Draghi, which had a lot of restrictions? Or are they going into that new virus program that really we can see help a lot of countries with less restrictions? It's a lot easier to tap that money.
Good question, and I would say it depends really on what we will hear today. If she talks very, very pessimistic about the economy and the pandemic things, if she really plays that card, I would say then maybe you can see in December a different program without all the things you explained. If her wording is more, I would say it's pessimistic, but not too pessimistic, then I would say the old programs will continue. Maybe we will put a little bit more money into that things, but then we will not see a new program.
You're great to catch up this morning. Appreciate your time, sir. Jörg de Vries-Hippen there, Allianz Global Investors CIO. Anne-Marie mentioning that ECB decision, full coverage right here on Bloomberg TV, 1:30 London time. We'll bring you that press conference as well, in full, on Bloomberg TV a little bit later. Coming up on the program, 5 days until polling day, and more than 76 million people have already voted. The latest on Trump v. Biden next from the City of London, with equities trying to make some kind of comeback after an ugly 3 days. This is Bloomberg.
You probably haven't heard, but I caught it. I caught it. Did anybody know that? I caught it. And then you get better and you're immune, and they say you're immune for a year. They used to say you're immune forever. But when I got it, I said, I'm immune. They said it's only for 4 months. I don't know what happened. They said you're immune for a lifetime, right? Remember? Until I had it. Once I had it, now it's only up to 4 months. But I got better.
Folks, we've lost more than 220,000 lives of this virus already. But this administration has just given up.
President Trump, former Vice President Joe Biden speaking yesterday, 5 days until Election Day. More than 76 million Americans have already voted. Anne-Marie, I keep referring to this. We keep saying 5 days to go, 4 days to go. It's 5 days to go until this thing wraps up. The voting's been going on for weeks now.
Yeah, certainly has. We're already 55% of the total votes, John, casted in 2016. Two places that stand out for me, Texas. They're at 91% of those votes from 2016. And some counties in Georgia have already blown past what the votes were in 2016. So this is really historic in that sense. But you make a very good point. We're in this election today, whether or not it wraps up 4, 3, 2 days. People are voting.
We're going to be catching up with supporters of both parties over the next 48 hours. I'm pleased to say we start this morning with Ralph Freund, the Vice President of U.S. Republicans Abroad, Germany. Ralph, great to catch up with you, sir. Let's just start right here. There is a very, very big difference in approach on COVID-19 from the president right now in campaigning and the former Vice President Joe Biden. Why do you think the former approach is going to resonate with voters more?
Say that again. I didn't hear you well.
Oh, Ralph, I'll repeat the question, sir. Hopefully we can establish that connection a little bit better. Quite clearly, over the last couple of weeks, there's been a very different approach in both campaigns on the issue of COVID-19, right, from the President of the United States, from the former Vice President Joe Biden. Why do you think that the approach of the President of the United States is going to resonate with the electorate that little bit more going into next week?
Well, the point is you have to, we got to mention that the president really is not responsible for the management for COVID-19. I mean, the governors are of each in individual states. We have 50 states within the U.S., and they all have different restrictions. And of course, you have, I call them flyover states within the country. You have less COVID urgencies than you have along the coast, of course. So really, the management is done every state, like really, let's say, from the local management, from the governors, and not from the president. The president, at the best he can, could coordinate or talk about it, but he cannot act. So I really think he is not responsible for this COVID crisis currently going on in the U.S.
Ralph, good morning. Thanks for joining us. As part of the Republican Party abroad, you're also a CDU party supporter. I want to ask you about the differences of approach we've seen out of Germany and the United States. More than 227,000 Americans have died from COVID-19. Per capita, you can see it right there on the screen. The United States is the top one in the top 5. Germany, nowhere near that. How do you rate the response from the president and from Chancellor Merkel?
Well, I think it's a different way of living in Germany. In Germany, you don't have as many generations under one roof. You barely have more than one generation, maybe two. You have parents like me and children. But in the States, most likely also the minorities, Black Americans, also like the Hispanics, they live together with grandparents, grandparents, grandchildren. So basically, the possibility to catch COVID-19 is much higher, like it is, by the way, also in Italy or Spain, where they have basically the same understanding of living together under one roof. So it really matters whether you stay apart and you keep up all the medical, let's say, advices, or if you just live together in small space, like a lot of people, 8, 10, 12 people in a small space. So I think we have structural differences between Germany and Spain, Italy, or the U.S. I think that's one of the reasons why it explains it, why we have so much further more infections in the States than we have actually in Germany.
Well, Ralph, I guess it depends which part of either country you're living in, your own personal family dynamics. You are sitting in Germany. I want to ask you about a transatlantic question. President of the United States this summer announced the removal of troops out of Germany. Was that the right move?
Well, moving troops out of Germany, I'm even surprised, because I work partly also with my business for the American Army. I'm surprised they stayed so long. We're no longer a frontier state. And of course, after 30 years after the Iron Curtain fell, I think we don't need 53,000. I mean, we need 35,000 American troops and another 18,000 civilians. And it was astonishing and amazing they stayed so long. So I think now the new challenge is more towards to the east, where we are facing Russia, and certainly not Germany. Germany doesn't need further protection from the U.S. at this point, I think.
Ralph, it's great to catch up with you, sir. Thanks for giving us your time this morning. We appreciate it. Ralph Freund there, the Vice President of U.S. Republicans Abroad, Germany. Let's get straight back to the price action. 47 minutes into the session, struggling to put together a morning of gains on a Stock 600 and Euro Stoxx 50 with the movers. Here's Danny.
John, I think really what's happening in the banks really helps encapsulate what's happening in the market action today. You have Standard Chartered, Credit Suisse, both falling despite the fact that they're talking about returning capital to shareholders. But what is doing well today? It is momentum. It is growth. Tech doing well. Value getting hammered with those concerns over the economy, really centered in Europe. What is doing well are Asian markets. That's part of the Volkswagen story. They have that big exposure to Asia, the Chinese demand picking up. As Nomura puts it, this has really started as a European story, and liquidity is drying up with more people at home. So when liquidity is down, volatility is up. John, Anne-Marie?
Danny, thank you so much. Another stock movie this morning, LVMH, getting a bit of a boost higher, up 1%. This comes as they revived its Tiffany purchase after cutting the price offer. For more, let's get to Deborah Atkin, our Bloomberg Intelligence luxury analyst. Deborah, thanks so much for joining us. Break this down for us. They were supposed to go to court last time I checked in Delaware. So is the saga finally over between Tiffany and LVMH?
It seems to be. So LVMH, they were given clearance for all of their jurisdictions on the 26th of October, which opened up for the deal to proceed fully. And there has been mudslinging, but they are set to agree outside of the Delaware court, which is good for both sides. Prior to this, LVMH had accused of material adverse effect on Tiffany for not running the business as succinctly as it felt other peers were. That could easily be discredited in our view, and we were siding on the side of Tiffany. We viewed this as a good deal for both.
Deborah, what does this mean for the sector more widely, for the luxury space? I imagine Richemont this morning is getting a little bit nervous.
Yeah, I think that the expectation has been, from our side anyway, that this deal would complete. Richemont, in the meantime, has continued to build its own stake and share. But and others also, carrying in the background, Hermes and others. I do think that it means that Richemont with Cartier brand are doing a lot more, have been seen to do a lot more, are doing very well on Tmall, for example, the luxury pavilion of Alibaba in China. So it's really working on its own area. We didn't ever feel that these two companies, Tiffany and Richemont, would be able to come together. It was all about LVMH, but with Kering creeping up in the background, we also think that's another reason why these companies and boards have come together to make this deal happen.
Deborah, thank you. Appreciate your time on this. Breaking news in the last 60 minutes. Deborah Atkin there of Bloomberg Intelligence, the luxury analyst, firmer on the LVMH trading in Paris, France, up by 0.8%. Up next on this program, what's driving the markets this morning? ECB decision day coverage on Bloomberg TV, 1:30 London time. Christine Lagarde's press conference coming right up, with an equity market struggling to put together a morning of gains following a brutal 3-day set of losses across Europe. From London, this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Dollar 117.31, and in the bond market we keep that bird on German 10-year bunds rather, negative 62 basis points on a German 10-year going into the ECB later today, Anne-Marie.
Yeah, we're only 53 minutes into today's session, Jonathan. A lot coming up. 12:30 p.m. UK time, we get U.S. GDP. Then an hour later, Christine Lagarde, we'll hear from the president of the ECB. Following the policy meeting, Jonathan will bring you that in his 1:30 a.m. hour. And also watching earnings from big tech, Facebook, Twitter, Apple, Amazon, Alphabet. They are all out with earnings today, and it comes after they got quite a brutal beating yesterday on Capitol Hill.
It was tough for them on Capitol Hill. It was tough for them in the equity market as well. Bottom of the pile on the S&P 500 in yesterday's session. Huge evening coming up stateside for earnings. A little bit later for Europe. Worldwide, the focus on the ECB president. Joining us now is Richard Jones, Bloomberg's MLive rate strategist, and FX as well. Rich, great to catch up with you, sir. The ECB a little bit later today. What's the focus for you, Rich? So many people don't expect Christine Lagarde to do anything, yet the pressure's still on. What are they looking for?
Well, good morning, John. Yeah, I think that base case that the ECB is probably not going to do anything today is probably on point. I mean, I think they're probably going to hold fire until December, and I think they'll do it for a couple of reasons. One is I think any ECB action today might look panicky, and I think it could potentially spook the markets. And I think the markets aren't expecting an easing today, so I think the Governing Council is probably going to welcome the option to wait for the updated forecast before doing something in December. And then the other thing to not forget is that we have these lockdowns, these partial lockdowns in Germany and France through the month of November. I think it gives the ECB a chance to assess the impact of those tighter pandemic restrictions before acting. The one thing, though, I'd say, though, is that given how the intensification of the virus has really tightened its grip on Europe, I think you could get some justification for the ECB to act preemptively today. I mean, if you listen to what Macron said yesterday, he said the virus is intensifying at a speed that even the most pessimistic forecast didn't foresee. And I think I look at Germany's virus cases here, and they're above 23,000 now. I remember not so long ago, we were really concerned that when those numbers crossed 10,000, of course, they're twice as bad now than they were. So I think if the Governing Council decided to act proactively today, I think we get BTPs tightening against Germany. But I think even if they don't, I think the key takeaway here is that bunds are going to stay bid for the coming weeks, because I think German yields will be the standout market development, irrespective of what the ECB does either today or in December.
Rich, it's like old times. It's great to close the show with you. Richard Jones there, MLive strategist, ahead of that ECB decision. Some breaking news in the last couple of minutes, Anne-Marie. German unemployment data.
Yeah, German unemployment data, it is dropping, Jonathan. That has to bode well for Chancellor Angela Merkel, as we saw her take to the parliament today, saying it's a dramatic situation in what is going on in Germany.
day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Reining in the virus, France and Germany lockdown for a month. Italy may be next. European stocks and futures rebound after yesterday's fallout. Waiting for the ECB, economists expect Christine Lagarde to signal she stands ready to act. BlackRock's vice chair, Philip Hildebrand, joins us this hour. And profit misses. Credit Suisse looks to buy back $1.65 billion worth of shares. The chief executive, Thomas Gottstein, tells us volatility in the market could be good for trading. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lachman in London, Tom Keene in New York. Tom, we have a number of stories, of course, that we need to look out for. I have to say, left, right, and center is the markets. The other thing is actually LVMH and Tiffany. After it was on, it was off. They were going to the courts. Now it's back on. I mean, it looks like a bad soap opera of a marriage breaking down and then being revived by marriage counselors. But it's amazing that they're still buying it. It's the biggest luxury goods, of course, M&A, but the discount was about $400 million. Yes, Tom.
It's amazing to know. I was doing some reporting the other day for Bloomberg News outside the old Nike store on 57th Street. It's a pop-up for Tiffany's as they blow up their iconic 5th Avenue, 57th Street shop. You wonder what the French will do with Tiffany's. It's going to be fascinating. It's in New York. I know on Bond Street it's a different layout, but in New York, Francine, all of these luxury icons are within literally 2 buildings of each other. It'll be fascinating to see where they are after the pandemic.
Yeah, it's the same here, Tom. Here it's Bond Street, but actually, you know, we talked about it in the past. It's about segmentation, actually, also making different jewelry categories for different segment of the population. Now, let's get... No, always a good idea, Tom, to buy jewelry for...
I thought Schlumberger was an oil company. That's how dumb I was. My reporting showed otherwise.
Yeah, more luxury throughout the day. We will also look at the markets and politics. Let's now get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. Hurricane Zeta has weakened to a tropical storm as it heads through the southeastern U.S. It battered New Orleans, left 2 million people in the dark, and led President Trump to declare an emergency for Mississippi. Zeta was the 5th hurricane or tropical storm to hit Louisiana this year. The Bank of Japan stood pat on policy but trimmed its economic forecast for the current year. The Japanese economy is now expected to shrink 5.5% in the fiscal 2011. That's up 0.8 of a percentage point from the previous forecasts. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Hey, Ritika, thanks so much. We have a packed hour for you. I'm going to go through this fast just because of time, but nevertheless, it is important. There are some stunning distinctions in the data check this morning off the carnage yesterday, and it is transatlantic, and it goes to the tension of Christine Lagarde speaking this morning. Simply, Germany, everything considered, doesn't rebound. The DAX is flat. In the U.S., futures up 28. I can't say that about Germany. And I'd also note, Francine, to keep this short, the German 2-year yield, as John Farrow was mentioning moments ago, really just can't get a bid. It is an ever negative statistic. We'll watch that carefully through the morning.
Yeah, Tom, I'm actually looking at the German 10-year Bund. This is significant because, you see a lot of banks putting out notes saying this will not actually move on the back of what the ECB could do, but it will certainly move on the severity of the lockdowns and the restrictions around Europe and especially Germany. What was interesting for me yesterday, Tom, was that the sell-off really hit all asset classes, including gold. So I wanted to look at gold, another haven, which is, of course, yen 104.24. Now, joining us now is Steen Jacobsen. He's Saxo Bank Chief Investment Officer. Steen, thank you for joining us. Two questions. First of all, are we going to see more sell-off days like we did yesterday? Was it profit-taking? And why had we not been expecting this? What are the markets so fearful about?
The second question I cannot explain because it's pretty obvious what's been going on in terms of the COVID-19 and the surge that we've seen. I think what the market is underestimating is the fact that they have always thought that the second wave will be less important and less of an impulse to economics. But I think they're forgetting that we are still living with the first order fallouts from the first time we were around with COVID-19. So the compounding effect, although we're going to see less rigid measures this time, it is still a huge impact on the economy. And as you say, it leaves the ECB in particular in a very, very hot spot.
Steen, on the ECB, so there's a lot of market chatter about, the ECB ready to stand more. And then there's someone at UBS, Paul Donovan, who said something that for me was a bit of an outlier, but very clever, in saying you have governments trying to stop economic activity. Why would the ECB at this point try to restart it? Is it not up to fiscal to just make sure that if you close the economies, people have enough job to get back to work when they reopen?
That's a very easy question to answer, actually, because central banks now has taken upon themselves to be going for full employment rather than inflation targeting. Maybe it's just the fact that they have an inability to control the inflation, but what we've clearly seen in the terms of Fed is that Carita is leading a theoretical charge, which is that full employment is more important. I think that is the same that will persuade, and sort of the remit of Lagarde is to make sure the fiscal policy is enacted as a support to monetary policy. What I think is interesting is that the main obstacle, if I was the ECB chairman today, would be that I don't know when the ECB recovery money is going to come through. It was supposed to be January 1st. It's obviously going to be delayed. I still have no real transparency on how much and how big the deficit and the fiscal impulse for every individual country is coming along. And then I'm looking at my desperate measure during the COVID-1, which was the 1.35 trillion of PPP. It was the fact that you accepted that the distribution key was diluted, and most importantly, you even accepted that what I will call poor quality collateral was given, and a minus 1% lending rate. I mean, come on, they have minus 1% at deposit rate of minus 50. If that doesn't get the juice going for companies and credit in Europe, it will not work. And that is exactly, of course, what the banking service showed yesterday.
Interesting that you mentioned that with the heritage of the Copenhagen Bank. Steen, one of your great charms is you come from a trading background, which always means you're more acute about what's going on in the markets. How is this pullback, this drawdown, different from September or even the more modest drawdown of June? What is the nature of it versus the other surprises we've seen along this bull market?
One, the policy response is, what are they supposed to do? I give it back to you. I mean, what are they supposed to do, Tom, in terms of the response function here? They've done everything they can, liquidity, provision-wise. The only thing lacking, of course, is going to RAG to lend money to the market. And I think what is also interesting is that the market is still the only asset that really works in these kind of conditions, which is to be long volatility. We continue to see, even early on in this later part of the September drawdown, that volatility remained high. The mid part of the cycle of the curve remains very big. So for me, this is clearly indicating we are positioned wrong into this, and we have underestimated the compounding effect of a COVID-1 and a COVID-2 impact on the economy.
Is the only way then to spur aggregate demand and to get true demand back to clear the market by mergers, combinations in Europe?
It is, and we need the banking union in place. We need to have a uniform fiscal policy, because what we see right now is a south-west divide versus a north. The north's doing relatively fine, but if you take the exact banking data from yesterday, I think they're very telling. Spain's net credit conditions was tightened 40%, but there was a drop of 60% of demand on the banking system. Clearly, not even giving money to the bank is going to give and create money. So, Roger, Tom, you're absolutely right. What we need here is a different take, which is that you leave it to the government to do what they need to do and step out as a central bank, because you're losing integrity by continuing to play to the first question, which was what are governments even doing trying to get the juice of the growth and the employment back up?
Steen, what does this all mean for German Bund yields? And do they actually move on what ECB says, or are they just looking at virus?
They're just looking at being a safe haven. They are, in my opinion, very, very small correlation to the actual data and the ECB. I think most traders that I talk to think that the ECB is just stuck. And the reason that we hold Bunds is that it is the most liquid, the deepest market, the best credit rating that you get relative to everything else. If you're in the carry game, of course, you buy the BTBs, but overall, we're buying Bunds because it's a cash-like asset.
Steen, thank you so much. Steen Jacobsen there, Saxo Bank Chief Investment Officer. Tom, I know there are a couple of people around saying, you know, maybe more mothers should actually be portfolio managers, because if you have a young family, you know that viruses really take hold in the winter months. Now, coming up next, our Guy Johnson speaks with the Airbus Chief Executive, Guillaume Faury. That's coming up shortly, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
After 9 years at the helm of the world's largest wealth manager, Sergio Motti is handing over the reins. On his last week as CEO of UBS, I spoke to him about overhauling the lender, taking risks, and what it takes to be one of Europe's longest-serving bank CEOs.
It's not about beating somebody. It's about doing the best for your clients, doing the best for your shareholders.
Catch my interview with the outgoing UBS CEO, Sergio Motti, this Friday on Bloomberg Television.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Another takeover in what is already a record year for chip industry deals. Bloomberg's learned that Marvell Technology is nearing an agreement to buy Infi. The price is about $10 billion. Marvell will pay 60% of the price in stock. Infi counts Microsoft and Cisco amongst its biggest customers. Samsung Electronics is warning that earnings in the current quarter will decline. The world's largest maker of memory chips and personal electronics blames that on intensifying competition and weakening demand. In the third quarter, Samsung said net income rose a better than expected 52%. And Ford is riding a wave of momentum from new models and a new management. The automaker easily beat expectations with third-quarter earnings. Profits were driven by demand in North America for pickup trucks. Overseas markets are still a drag for Ford. There were losses in China and Europe. Still, the company now expects to stay in the black this year. That's a reversal from an earlier outlook. And that's your latest Bloomberg Business Flash. Francine, Tom.
Thank you so much, Ritika. A lot of the focus, of course, is on the markets. We'll do extra checks throughout the day. We're seeing a bit of a rebound, certainly when it comes to European stocks. That could filter through also some of the U.S. stocks. I'm looking at bonds. Overall, of course, gains are modest. Record coronavirus infections in Europe emerging across the world's biggest economies, and that has a lot of markets questioning what that means for future inflation expectations and future growth. I also want to mention Credit Suisse, Tom, slipping after profit missed analyst estimates, and of course, it's ECB day. And I was speaking to Richard Jones, who is basically, to put it simply, bunds are caring more about the virus impact than the timing of the ECB easing at the moment. And you can see the German 10-year yield negative, Tom.
Futures up 31, Dow futures up 212. Without question, U.S. Statistics better, data, I should say, better than what we see in Europe. I do want to note oil south. There's no other way to put it. Brent crude down 74 cents. West Texas down a like 73 cents. 36.66 on West Texas Intermediate. Euro Swissy, very interesting. We went down to new Swiss strength. We've reversed that in the last 10 minutes. That's something to watch. And I do want to point out the soap opera of the moment, as Francine mentioned. I'll say it's Turkey and Turkish lira, 8.31 on Turkish lira. That is a weaker lira. We're going to regroup here and come back with an extremely important conversation. Guillaume Faure is with Airbus, their chief executive officer. This, of course, after the difficult cash burn at Boeing announced yesterday. Our Guy Johnson with Guillaume Faure. We do that next. This is Bloomberg.
The 2020 presidential election is in the home stretch, and a handful of states will decide who occupies the Oval Office. I'm David Weston. Join me for our second Swing State special as we turn our focus to Florida, Pennsylvania, and Michigan this weekend on Bloomberg Television.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Surveillance. Good morning, everyone. From London, from New York, 5 days to the election. Francine Lacroix and Tom King. We're watching the markets. U.S. a lift, less so in Europe, and we'll be monitoring that. Of course, Christine Lagarde later this morning. Yesterday, there were some challenges on the earnings front in America, including a Boeing with a $40 billion revenue shortfall from the peak of 4 years ago. EBITDA attended, and 7,000 layoffs as well. It is of note on the continent of Europe, and particularly in Toulouse, with a gentleman from Airbus, our Guy Johnson.
Tom Keane, thank you very much indeed. Yeah, interesting compare and contrast, isn't it? Airbus out this morning with, relative to expectations, a good set of numbers. Adjusted EBIT coming through at 820 million. That's above even the highest analyst estimate. And the company is saying in Q4 that it's going to be at least cash flow neutral, looking for something maybe a little bit more positive. As you say, Guillaume Faury is the CEO of this company. He is the CEO of Airbus, and he joins us now from Toulouse. Guillaume Faury, good morning. Thank you very much indeed for your time. Guillaume, Q2 was tough. It was really tough. Q3 looks so much better. Are you now comfortable with where you've got the company? Have you weathered the worst of the storm?
Good morning, Guy. We're indeed quite satisfied with the third quarter. We have indeed delivered what we wanted to achieve, which is no longer burning cash in the quarter, and that's what we've achieved. And we think we are in the corridor of expectations we had set to ourselves. So I can't say if the worst is behind us, but what I can say is that the plan we've put in place, what we call the adaptation plan, is delivering the results we were expecting so far.
Let's talk about your biggest program, which is the A320, the narrow body that really drives the bulk of the world's airlines. At the moment, you've got production at 40, and you're going to continue that until the summer of next year. Then you are going to ramp up, and you're going to ramp up to circa 47. Guillaume, what gives you the confidence to do that? Because your friends in Chicago yesterday sounded really quite downbeat, and they were talking about a new reality. Why do you have the confidence to ramp up that 320 line?
We have a very strong product with the A320 family, and the very strong demand from the market for that product before the pandemic, and as we can see also beyond the pandemic. The backlog has remained very solid. As you have seen, we've not been facing cancellations, and that's a very positive sign from the market. We are now at 40 aircraft a month in terms of productions. Our objective was to converge the deliveries and the production, which is what we have achieved in the third quarter, and we'll continue to stay at the rate 40 per month for the foreseeable future. We have in our supply plan a ramp up from 40 to 47, beginning of the third quarter of 2021. It was earlier at the beginning of the second quarter of 2021, so we have pushed that point in time by 1 quarter away, and we'll continue to monitor, but based on the backlog we have today and based on the contracts we have with our customers, this would require a ramp up in the second half of 2021. We'll keep monitoring. We are in a very dynamic market given the evolution of the pandemic, and we remain very focused. But on the short term, again, we think the rate 40 is the right one.
Yeah, I want to come back to that kind of dynamic approach that you're taking in just a moment. But which regions are giving you the confidence to be able to do this? Is it all China?
No, it's not all China. You make a good point. China is indeed recovering very well and is very strong at the moment. They are back to 100% of what it was in 2019 for the domestic flights. That's very positive. No, the result is a combination of what we see globally all around the world. And when we look at one region or the other one, it's changing, it's fast changing, sometimes with good news, sometimes with bad news. So we have to remain prudent locally. But what counts for us is the overall market. And the overall market tells us that the rate 40 seems to be, again, the right position for the production of the Airbus A320 family.
You mentioned just a moment ago the dynamic approach that you're taking to matching production and deliveries. Now, that is critical to the kind of cash flow story that you've been discussing here this morning. How challenging is that to make that happen?
It was very challenging at the outset of the crisis. At the very beginning, we were producing by far more planes than we could deliver, and we have therefore inventories that have piled up. We were at 145 planes finished but not delivered by the end of H1. Now, by the end of the third quarter, we are down to 135, and that's an important indicator of the situation because what we deliver is now slightly more than what we produce. That's why we have reasonable confidence for Q4. That's why, by the way, we issued a guidance for free cash flow before M&A and customer financing in the fourth quarter.
In terms of the limitations to production, are you anticipating any issues as a result of the new lockdowns that are being imposed? We saw the French president speaking last night. The idea is that factories and workplaces remain open. But as we work our way through the winter, do you see that further restrictions could impact production?
We have learned to adapt to this new environment in the first phase of the pandemic. That was by far more brutal, and we had no time to adapt at the beginning, so we had to learn. We have invented new ways of working to be able to produce in a safe way with protecting the health of employees. Now we have this in place, and by the way, we have maintained the vast majority of those measures even when the pandemic went down. So we think we're prepared. The governments have as well shown that they pay a lot of attention to make sure that industries can keep working, and therefore my most likely scenario is that there will be up and downs of the measures, but we'll continue to operate in this more challenging environment, but again, an environment to which we have adapted.
Let's come back to your friends in Chicago. Yesterday, announcing fresh job cuts. Is there a danger at this point, given your outlook, of cutting too much? You warned back in July when the 15,000 job cuts were announced at Airbus that that wasn't the worst case scenario. Do you think that that worst case scenario has now been taken off the table? Do you think you can rule out at this point further job cuts? And is there a risk if you did that, that actually you wouldn't be able to come back when you need to?
I think we have to remain prudent and humble. And nobody can discard any scenario given the complexity of the pandemic. This being said, we think we have taken the right measures, including when it comes to the job adaptation. We are implementing those measures now, and we have found a lot of good ways of dealing with the situation with our social partners and with the governments. And in particular, on the 15,000 jobs, we are very happy that we can protect part of them with the long-term partial unemployment schemes that have been put in place in Europe by some governments, where we can retain some key skills, but they are funded by government, so we don't have to pay for it in the pandemic. But those people will still be with us when we will be ramping up again. We will have the skill. It was very difficult in the ramp up to find those people, to find those skills, to onboard people, to train them, and it's important to retain some of them. Now, again, we will see in 2021 how things will play out. We think we are appropriately geared for the moment, and now it's all about execution.
I've heard you say time and time again that tariffs are a lose-lose. How important is the election in the United States going to be to Airbus? Would a Biden win make you more optimistic that the tariff disputes between the United States and Europe could be resolved more amicably and more quickly?
What makes me very optimistic that there will be a resolution moving forward is the ruling of the WTO that proves what we were saying now for more than a decade, that there were illegal subsidies on the Boeing side. This is clear now. The EU has obtained the right to put tariffs on up to $4 billion of US dollar of goods going from the US to the EU. And this is a way to rebalance the situation and to come to a de-escalation, whatever the administration. So we think that's the major event that will drive the evolution of that dispute.
Guillaume, as you well know, sustainability is now a touchstone for investors. I understand that Boeing is now shopping a new conventional aircraft. You've come out with plans for 3 hydrogen-powered aircraft. Do you think, how confident are you that the next airframe that Airbus produces will not be a current generation aircraft, and it will be an aircraft that is powered by an alternative source of energy?
Very good question, thank you. At Airbus, we think we have the privilege to have 4 modern platforms, new planes. I mean, the A220, the A320 family, the A330neo, and the A350. And we'll keep improving, modernizing those planes, obviously, so they will be more and more environmental friendly. Now, when we look at the long-term future, we absolutely believe in the need for decarbonization, and we're investing big time. We see ourselves as pioneers in the domain of sustainable aviation, and we are putting our money, our efforts, our projects where our mouth is, and that's basically what Airbus is doing today.
Guillaume, always a pleasure. We really appreciate your time today. Thank you very much indeed for giving it to us. Guillaume Faury, the CEO of Airbus, Tom, joining us from Toulouse.
Interesting guy to see this, and of course the parallels here. I just did a compare and contrast of Boeing and Airbus, and I'll be honest, Guy, the income statements really aren't all that much different in terms of being hammered by the pandemic. Guy, inform our waking American audience of the government support for Airbus. To be blunt, Boeing doesn't have that, do they?
This is the genesis of the entire WTO dispute, Tom. One side claimed that there was launch aid for aircraft. This is Airbus getting into the wide-body market. Airbus claiming that Boeing received significant subsidies as a result of its military programs, that money was funneled in not via loans but via military subsidies. The WTO has ruled on that slightly on balance in favor of Boeing, but nevertheless it has ruled in favor of both sides. And in theory, and this is what the sort of penultimate question there was about, in theory we should be approaching some sort of resolution. It'll be interesting to see whether the outcome of the election has a material impact on that. But the WTO has ruled that both sides were ultimately supported by their governments, Tom.
Guy, you're an expert on this. My major travel issue is, do they have olives on board or not? You're actually into the airplanes. There is an uproar now about the retirement of the Boeing 747 led by British Airways, finally putting them into bed. Is there any romance about the Airbus design?
I'm a big fan of all of them. I'm a big fan of the 747. I think that's a beautiful aeroplane. It's interesting that Lufthansa, Tom, is not retiring its 747s. It will continue to fly 747s. It's retiring some of the older ones, but it will continue to operate a 747. So if you want to fly to this part of the world, I think you're going to have to go via Frankfurt if you're looking for a 747 flight. But yeah, the evolution of aircraft has changed. The 747 was built an awfully long time ago. Aerodynamics and design have changed significantly, Tom. But I think the 747 designed very, very quickly. One of the most beautiful planes ever built.
Guy Johnson with Airbus, and of course, really quite knowledgeable about this crisis in air travel that we see truly worldwide. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. It's the 5th time this year that Louisiana has been hit by a tropical storm. Zeta came ashore there as a hurricane and battered New Orleans before heading into Mississippi and then Alabama. It's now been downgraded to a tropical storm. About 2 million people are without power today. At least one person was killed. A tough critic of President Trump is anonymous no more. The former chief of staff at the Homeland Security Department says he's the official who wrote an op-ed and a book critical of the president, both under the byline Anonymous. Miles Taylor resigned from the agency back in 2019. In Germany, Chancellor Angela Merkel has defended a decision to once again severely restrict movement. She told Parliament the country is in a dramatic situation with the rapid spread of the coronavirus. Starting Monday, Germany will impose a month-long partial shutdown. Taiwan has achieved a different kind of record involving the coronavirus. The country has gone 200 days without a locally transmitted case. Overall, Taiwan has had 550 cases with 7 confirmed deaths. The island has relied on strict border control, contact tracing and masks. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Tom Francine.
Rudika, thank you so much. Now, coming up next, we'll talk a lot more about the markets and, of course, what these restrictions or lockdowns mean for volatility going forward. We'll be joined by Philip Hildebrand, BlackRock Vice Chair. That's coming up shortly, and this is Bloomberg.
Lockdowns are unfortunately a topic again. I think in most countries, actually, there will not be a hard lockdown like we had it in April, but the impact on economy is certainly not going to be great. But on the other hand, in most jurisdictions, including here in Switzerland, for example, people are very much focused to keep restaurants open, to keep stores open. So it's a bit too early to say. Obviously, we are prepared for it, but it on one side actually means more volatility in the market, which is not necessarily bad for our trading business.
Well, that was the Credit Suisse Chief Executive Officer, Thomas Gottstein, on preparing for new lockdown measures. The company, of course, the Swiss bank reported earnings today. They missed analyst estimates, and both the wealth and Swiss businesses were actually worse than expected in the quarter. They did say that they were targeting a $1.5 billion buyback. That would be for January. Now, talk about the markets, talk about banks, negative rates, and, of course, the U.S. elections. We're delighted to be joined for an exclusive conversation by Philip Hildebrand. He's a BlackRock Vice Chair. Philip, as always, thank you so much for coming on. We always value your insight. It's always a little bit of a different take to what we hear otherwise. When you look at what the market is doing right now and the correction, Philip, that we saw yesterday, is it just a blip, or are they catching up with the economic reality? Is that we'll be in these restrictions, lockdown on and off for quite some time?
Good morning, Francine. Great to be on the set. I wish it were real. Look, I think it's all driven ultimately by hospitalization rates. That's what the market is focused on. It's clear that once again, the health aspect of all of this dominates, and then economic policy follows, lockdown policies follow, the infection rates. And
Philip, I think we're just having a couple of technical difficulties. We couldn't hear Philip Hildebrand there, so we'll try and reestablish the connection, Tom. It is easier to do these interviews, of course, in person, but at the moment we can't. Tom, if you look at the markets, a couple of things that we were talking about. One, of course, is German Bund and what's driving that. Remember, it's also ECB day, so we're expecting to hear from Christine Lagarde.
Right.
The pitfalls after she was pretty optimistic back in September about the path ahead. I don't know whether this changes anything, and of course, I think the killer question for Philip Hildebrand is whether central banks at this point can do anything at all.
Francine, you are expert on this, and it harkens back to the 2016 attack on the coastal city of Nice on the Mediterranean. I believe, Francine, we are announcing a second terror attack in Nice moments ago. Place this in perspective, Francine, for Mr. Macron in France.
Yeah, this comes at a very difficult time for the president, of course, of France. This comes at a difficult time also for relationships with Turkey. Now, we don't know what the perpetrator is, who he is, or what the attacker is, but we did find out, and I first read it, Tom, on Le Monde, which was basically an attack with knives in Nice. We understand it was next to a church. We're looking at Twitter. We're monitoring, of course, through our sources on the ground. It does seem that it is a terrorist attack. I don't know whether it is linked to also the beheading of a school teacher in France, Samuel Paty, that happened about 2 weeks and a half ago. But we did hear from the Interior Minister of France saying a police operation was underway. Again, it's extremely upsetting news, Tom, but it could also have repercussions on the relationship between France and countries that have called for the way that France is dealing with Muslims, not effective and not appropriate. And that came from President Erdogan of Turkey.
And again, a second event, folks. This is a developing story. We'll have much more for you through the morning as we attempt to continue with Dr. Hildebrand of BlackRock. Futures up 26, Dow futures up 166. Stay with us. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Let's get straight back to Philip Hildebrand of BlackRock. We have a number of things to ask him, including U.S. politics, but of course lockdowns and the impact on the markets. Philip, good morning to you again. When you look at what the market has been looking at and the sell-off that we saw yesterday, how are they worried that these restrictions or the lockdowns will last much longer than we thought? What are they actually worried about?
I think it's two things. First of all, it's clear that the hardest part of this recovery is ahead of us. In a sense, what we've seen so far, has been the easy bit. Secondly, it's the infection rates and particularly the hospitalization rates. That's what's going to drive the perception of how much of a lockdown or how much of several lockdowns we have coming down or what kind of lockdowns we might see. So it's really, once again, the paradigm of what we saw in the spring, where the public health system dominates or drives, rather, policy around locking down or restricting mobility and restricting the economy. Hopefully we can stay away from full lockdowns, but we are going to see restrictions driven by the hospitalization rates.
Philip, in this kind of environment, what can central banks actually do? If we're trying to slow down, economic activity, stimulus from the ECB would do what exactly?
Well, first of all, they have done an enormous amount, and they will continue to do whatever it takes. But I think the emphasis here is around fiscal policy, both to support the economy, but also to help transform it, and then manage the health aspect first and foremost. I think this is a first and foremost a public health support and transformation of the economy story. Monetary policy has done an enormous amount. They will do more if they need to, but the real story here is around the health policy and the structural policy of transforming and supporting the economy.
Philip Hildebrand, off of the Eiffel Tower and across the Seine in the 16th arrondissement, there's a small institution called the OECD, which has held court on economics and indeed on the global landscape. They represent 1.3 billion people. You are being vetted, among others, to take over for Angel Gurria and drive that institution forward. Tell us how Switzerland fits into the OECD. As a nation of centuries of neutrality, is that part of the discussion of who the next director will be?
Well, that will be left to the countries, but I would to decide. But, I'm very proud to now be the candidate of Switzerland and have the support of the government. But obviously, if I were to be appointed to this job, then you're there for the institution and for the membership, not for your own country. You're there for all countries that are members. Switzerland is a founding member of the OECD and has traditionally been very, very engaged through working groups, through committees. I used to attend meetings myself. I used to chair one of the committees when I was at the central bank. So I think it's clear that for any small nation, frankly, multilateralism is incredibly important. The transparency is important, openness is important, and I think the OECD is going to be in a very critical spot as we need to transform ultimately the global economy and address these long-term changes once we emerge out of COVID. Most importantly, I think climate change here is first and foremost the challenge we all face. And the OECD being focused on structural policy rather than monetary and fiscal alone is in an ideal position to play an important role there.
I take your point on that. And of course, part of this, Dr. Hildebrand, is the idea of making a more inclusive, or to finish the task of 1962 and indeed back to the 50s, where India and others are a little tentative on being part of OECD. What would be a mandate or a way to make the OECD truly more global?
Well, I think the OECD has been on an expansion course, rightly so. At the same time, it sets certain standards of democracy-based systems, market-based systems. And I think it's important to maintain those. At the same time, have a very extensive outreach program that plans for the long term. And I think Angel has done that very well, and I see no reason why that shouldn't continue. Global cooperation is on the back foot right now. It's very important that we reinvigorate it wherever we can. And that's good for prosperity. It's good for addressing inequality issues. It's good for growth, and therefore I believe the OECD will be in a very important position in the years to come.
Philip, I want to get back to the markets, but just on the OECD, one of the things that we've heard over and over again from Angel Gurria is the crackdown on tax havens. Is that really the best use of the OECD? If we don't have commonality or if people don't agree, then they actually can't do much with it.
Well, I think the tax haven story is a story of the past. That's past history, particularly the story around private banking secrecy, which, of course, as you know, was an important piece here in Switzerland. The country is now fully compliant with current OECD standards. You have full information exchange procedures in place. I think the real challenge going forward is fair and equitable taxation of global digital companies, where basically our national tax systems are clearly lacking. So the world needs an effective and new global framework on taxation fit for the digital age. If we don't get that, we'll see countries running in their own directions, often in conflict with each other, and that will undermine global prosperity.
Philip, what are you expecting from the U.S. election? I mean, I'm not asking you, voter turnout or who will win, but what does it mean for the markets? How much volatility can we see in the lead up to it and then in the immediate aftermath?
Well, the market remembers, of course, 4 years ago where you had an enormous amount of volatility. I think the challenge here is we have very different outcomes, very much dependent also not just on the president, but also on the Senate. And I think the outcomes, this is a very consequential election in so many ways, but also in terms of what it means for financial markets. You think of the fiscal piece, you think of the transformation, addressing climate change. These are you're going to have very binary outcomes, particularly depending on where the Senate goes.
I was talking with our EU banking team, Philip, and it's a really delicate question, and I'm going to you on this, not as former head of Swiss SNB, but really with BlackRock, almost in asset management and not in banking. Are we now with the pandemic, and now with this much worse pandemic of this month of October, at a true point of consolidation of EU banking? Are we at a point where the financial ratios are just untenable, and finally we need to see cross-border consolidation?
We do need a unified European banking market. I have argued this for years. I think that's clear. That's a very important piece that's still missing. Steps are being taken gradually, but it's being too slow. And until European banks have the ability to be clear about being able to operate at scale across Europe, they're going to be at a tremendous disadvantage. So I think, yes, it's coming. Yes, it has to come. There are still some obstacles, as you know, and it's critical for European banks to be able to consolidate and then ultimately operate at scale, particularly given the amount of investment that we're going to have to see on the digital front. So that alone requires to be able to operate at scale, and you can only do that if you can operate across the European Union. So I think banking union is absolutely critical for the future of the European Union.
Then do we need a little Schumpeterian clearing of markets? I mean, are we finally going to either take losses that literally can go back 13 years, or are we at least going to restructure and expand duration, lower interest rates, and do some form of cram down to clear the debt and debris away to get to a better productivity?
Look, a crisis always accelerates things, and that's true of COVID. I would say, though, even prior to COVID, it was clear that that's where we need to go. And if you look at the price-to-book ratios of European banks, even prior to COVID, it tells you that something in the structure of the European banking market is not right. So I think this is happening anyhow. COVID will probably accelerate it. We'll see what the losses will be ultimately down the road. I think the key is that the political system puts in place the right structure and the incentives for banks to be able to look at a scalable, comprehensive European market.
Philip, overall, are European banks too sanguine about the environment? So we're looking at lockdowns, and yet we have talk about dividends, resumption, and share buyback. And do they also need to just put aside more money for bad loans like some of the U.S. banks?
I don't think they're sanguine about it. I don't see any banker who's sanguine in the current environment, and that would be a very silly position to take on. ultimately what's going to happen is it's the cumulative loss of GDP that's going to determine how big this impact will be and how big a potential impact on the balance sheet would be in terms of losses going forward. We are now, as I said, this is the hard part of the recovery, and the number one priority right now has to be to get these hospitalization rates and the infection rates down. If we can achieve that, and I think the measures taken by the French, the German, the Swiss, and other governments in the last few days will hopefully achieve that. If we can do that, then I remain optimistic that we can prevent this terrible health crisis from mutating into a financial crisis, which was the part that was so terrible in 2008. So that's the key, and I think the measures that are being implemented right now as we speak in Europe will hopefully be constructive in this regard. And of course, we've learned, so this is not a total lockdown. I think it's very important to indicate that. We've learned, the authorities have learned from the spring, and they're trying to keep as much of the economy open as we reduce mobility, as we reduce infection rates, and as we improve the situation in hospitals.
Philip, thank you so much for joining us today. Philip Hildebrand there, the Vice Chair at BlackRock. Tom, we also need to bring, of course, all of our viewers and listeners up to date with what's happening in Nice. This happened, we understand, about 15 minutes ago, and it's a knife attack. I think we're looking at live pictures. What we know is the Anti-Terrorism Prosecutor's Office said there was an investigation open into an attack with a possible terrorist connection, but this has not been confirmed. The exact motive of the attack is unclear, but of course, France has been under alert for Islamic extreme terrorist attacks amid tensions over caricatures of the Prophet Muhammad published by a satirical paper, Charlie Hebdo. So we'll continue, of course, monitoring the situation. Those are live pictures coming as we speak from Nice.
And fenced off from the Basilica of the Notre Dame. The history of this is really remarkable, folks. This is to the southeast of France, on the border, frankly, territory that Francine knows so well. And this was not part of France until the 19th century. The basilica where this act took place, where these murders took place, was built only in the 19th century. And Francine, what's so fascinating, it was to Frenchify the territory. Do we perceive in the modern age, Francine, of Nice being part of France, or is it still a little bit separate way down on the Mediterranean?
No, it's 100% France, Tom. Remember, it's very close to Italy, which is why I know it well. It's very close to my hometown, about a 2 hours drive from northern Italy. But remember, Italy was also unified very late. Corsica at the time was France, was part of Italy and not France. So Nice is very much part of France. And one of the concerns, of course, is that, this could be linked. So we're speaking to reporters on the ground. This could be linked to some of the threatening conditions that were spread out on social media in the last couple of weeks.
A second set of murders in Nice. We'll continue to cover this as all of France and Mr. Macron react. Please stay with us. Futures advance up 24. This is Bloomberg.
Qui sont au fond, on ne voit pas la basilique Notre-Dame d'où nous
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
This morning, markets, they stabilize, they hold on to the bid. The DAX in Germany, it struggles. American equities do better. A shift in the bond market to curve steepening. The yen, the Swiss franc, the dollar show stability. We need to hold on, says Macron, to a weary France. The Germans, they call it a lockdown light. Hospitals, they fill. The mortality rate in Europe, lower than in spring. And 5 days to go, Trump and Biden and Trump, they recalibrate their separate messages into the weekend. Good morning, everyone. Bloomberg surveillance from New York and from London. Francine Lacroix and Tom Keenan. Yes, an extraordinary news day. But Francine, we must look south from you to Nice on the Mediterranean and another terrible set of murders in that city on the Mediterranean.
Yeah, Tom, so this is a developing story, so I want to be very careful of what we tell our, audience, what we tell, of course, our viewers and listeners. Now, we did see images on French media showing a neighborhood in Nice in lockdown, surrounded by police and surrounded by emergency vehicles after there was an attack at the Notre Dame church. Now, we understand that there was an assailant that was arrested on the back of it. 2 to 3 people could be wounded. There is a lot of talk and speculation about a terrorist attack, which has not been confirmed. So again, the exact motive of the attack is unclear, but of course it comes as France is really under alert for Islamic extremist acts after a teacher was decapitated about 15 days ago.
James McCauley of the Washington Post publishing moments ago from Paris, and he notes that it is an investigation opening for, quote, assassination and, quote, attempted assassination. And he notes that Mr. Macron will be heading to Nice in the coming minutes and hours as well. With an update on this, with our First Word News in New York City, here's Ritika Gupta.
Thanks, Tom. Hurricane Zeta has weakened to a tropical storm as it heads through the southeastern U.S. It battered New Orleans, left 2 million people in the dark, and led President Trump to declare an emergency for Mississippi. Zeta was the 5th hurricane or tropical storm to hit Louisiana this year. The Supreme Court has handed Republicans a pair of defeats on deadlines for mail ballots to arrive. Both involve states that could decide the presidential election. Justices left intact a 6-day extension in North Carolina. Meanwhile, they refused to schedule a fast-track review of a Republican appeal involving Pennsylvania. And LVMH has agreed to buy Tiffany at a reduced price of almost $16 billion. The French luxury conglomerate will get a $425 million discount from the original price. The agreement ends a year-long saga involving a war of words, French government intervention, and lawsuits in the U.S. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. With all the news flow, I'm supposed to get through the data quick, but I can't. Futures up 23 in America. That is not the case in Europe. Europe is a different picture as we see two-year German yield down to 3 digits, negative 0.797 in the DAX, certainly not mirroring the bounce here. We had a 40 VIX. It comes into 38.93 on the SPX. I do want to, Francine, I think I'm talking over you here. I'm sorry for that. I do want to mention oil, really quite weak today. Francine, I think that's a telling piece of data.
Yeah, actually, yesterday, Tom, what really struck me was it was the first time that there was a sell-off across the board. And yesterday, you know, I hadn't seen that for, I guess, a quarter or so. Gold was also down. So I put gold in my data check, 1,876. You can see there's a tiny bit of a lift to be European stocks. So they're rebounding. But again, a lot of the gains are modest as they worry about, markets worry about these record coronavirus infection rates. And then I'm also looking at yen, 104.12. Interesting, Tom, if you look at some of the economic data out of Europe, it's a bit better for the month of October. But again, you know, if you look at that, this is economic confidence holding steady, a bit better than expected. But we hadn't heard about the lockdowns yet.
Very good. We're continuing to monitor the events in France off this attack, these murders in Nice. We're waiting to hear from the government and, of course, from Mr. Macron as well. Right now to the United States and the election. Let us listen to the two candidates 6 days out. That was yesterday.
You probably haven't heard, but I caught it. I caught it. Did anybody know that? I caught it. And then you get better and you're immune, and they say you're immune for a year. They used to say you're immune forever, but when I got it, I said, I'm immune. They said it's only for 4 months. I don't know what happened. They said you're immune for a lifetime, right? Remember? Until I had it. Once I had it, now it's only up to 4 months. But I got better.
Folks, we've lost more than 220,000 lives of this virus already, but this administration has just given up.
In the mystery, as we go 5 days to the election, two stark messages there. I really can't say enough to our global audience about how the pandemic, apparently worse in Europe, has really taken over the moment-by-moment debate within this election. Watching and monitoring that moment-by-moment debate is our Ryan Teague Beckwith, and he joins us right now. Ryan, what will you listen for on this Thursday?
You know, the thing that I've been looking at is their messaging, really. And I think you got those two clips really show the difference there. On the one side, the Biden campaign is really shifted to that kind of late campaign traditional mode where they sort of stop talking about specific issues, and they start showing, you know, an Iowa corn farmer just, you know, walking in slow motion through a field. You know, like that, they've really gone straight into hope mode and talking about the future and talking about change and why you need to vote and your power and your voice. And their Facebook ads, for example, that's all they are. If you look at the Trump campaign's Facebook ads right now, I mean, I was trying to make a list just for like a little paragraph in a story, and it was hard to like keep it short because it's like law and order, you know, Biden will let Antifa run wild in the streets. It's taxes. He's going to raise your taxes. He's a socialist. It's just on and on and on. And so he's very much going for a closing message of trying to disqualify the other guy. And the contrast between those two approaches could not be more stark.
I agree with that. The contrast, folks, was really noted yesterday as well. Ryan, an incredibly difficult question, and this goes to your expertise of looking at the polls. Francine is really focused on Georgia, which I give her major credit for. She was way out front on that. Which of the battleground states has your attention?
Right now, I'm looking at Georgia and Iowa, and to a lesser extent, Ohio and Texas. I don't know if it's possible for Biden to win Texas, but a strong showing in Texas by him would lift the Democratic Party in a lot of down ballot races there. And right now, the Democratic Party in Texas is just anemic. And so even just a couple of congressional seats or something like that, you know, some state legislative seats there would start to mark kind of a shift in Texas. Ohio is another one where it had been kind of written off as not even anymore a battleground state and not even winnable. So doing well there, even if you fall short, would do a lot for the infrastructure of the party and sort of for making Democrats give it a second look in the future. So those are kind of, those are just interesting to me as like a politics nerd. I think that Georgia is absolutely a crucial state to watch there because not only is Biden on the ballot, but you have 2 Senate seats, one of which in polling is now, the Democrat is close to 50% there. The other one may lead to a runoff in early January, but pulling out that state, pulling out a win in that state could mean expanding his Senate majority if he gets one.
Ryan, good morning from London. So over 70 million Americans have voted early. Who's voted? What does that mean? Is it people that, had voted in 2016? Is it new voters? Is it voters that vote Democrat or Republicans? How does it change the dynamics?
Oh, well, there's some interesting questions. The data that we get on who has voted is really inconsistent state by state. Like, they don't all release it. But among the states that do release, for example, the party that the early voter belongs to, it is far and away Democrats who have voted already. Now, we expect that because since President Trump started attacking vote by mail earlier this year, Democrats have become much more likely to say that they're going to vote by mail, and Republicans much more likely to say that they're going to vote on Election Day. The question for Trump is, can he match that on Election Day turnout? Can he match what Democrats have been able to sort of rack up so far? There's also no way of knowing, a fair number of independents, like 23% of people who voted so far are independents. We don't know how those people have voted. We don't know who they voted for. And there are Republicans, of course. Biden has made a late campaign sort of pitch here to Republicans that it's okay to vote for him. It's entirely possible that some of the Republicans who voted already have voted for him.
Ryan, thank you so much. Ryan Teague Beckworth with an eventful day. Really, this is our Washington Bureau folks completely focused on this, not only for the next 5 days, but many indications suggesting in the days following 2 Supreme Court rulings in the last 24 hours, I'll say, on this, both of those tilting towards a Democratic constructive outcome. We've got much more for you. We are monitoring France. We have not heard from Mr. Macron yet about murders in Nice. This is the second bout of murders outside the Basilica of Nice. The symbolism of this to the nation and, frankly, to the continent is exceptional. We'll continue to follow this story. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
We don't really know how the pandemic's going to unfold. But what we can say right now is that at the margin, things are definitely worsening. And
I don't think it's really even a knee-jerk reaction, because we know from March and April what it means to the economy if countries or sections of countries or the U.S. start locking down again.
This is not surprising. I think portfolio managers that I'm talking to really want to get the election behind them and really focus on how bad the COVID news is going to be.
Because everything is hinges so much on the election outcome. Because you've got very different policy priorities coming from two wildly different candidates.
We're not seeing that support through fiscal stimulus from the government. We know what that means to the economy, and we know what that means to the markets.
I think the prospects are that we're not going to get anything substantial probably until after the inauguration, which is many, many months away.
Right now, all the question marks are in front of us, not behind us.
Voices yesterday, many will say qualified. Of course, we heard there from the former president of the New York Federal Reserve System, Bill Dudley, with an essay yesterday on the need for fiscal and monetary stimulus. We're going to avoid that right now. We're going to talk to Jack Ablin of Crescent Capital with his decades of experience in framing standard deviation moves. Jack, you're good at the math, and you know the media talks about point moves, uproar, turmoil, and all the other verbs to make ratings go up. Great. Jack, it's about a standard deviation move, and we've moved about 2 standard deviations. Is that a lot?
Yeah, I think it's a lot. I think it reflects the fact that, investors were not fully prepared for this second or whatever we call third wave, that everyone who wanted to get into the insulated, high growth, high quality, tech names have already gotten in. And so those valuations are pretty well, set. And now we learn it may be too early to tiptoe into those value out of the way, victimized parts of the market because we just don't know when we will get back to normal.
I look, Jack, at where we are, and there is that, what do you call it, fear of missing out? Where's the fear right now? Do we have a fear of missing out, or is a new fear here off of medicine and off of politics?
Yeah, I think the what's capturing the attention of investors these days is just the headlines. The fact is we will know in a week's time or so who will be leading the country. We do see stark differences in those plans. We do know over the next course of months we will likely have an effective treatment or vaccine that will hold a lot of these infections at bay. So from that perspective, there's a lot of near-term uncertainty. And for those investors willing to look past that valley, so to speak, I guess, there's an investing pathway. But, for our perspective, might as well wait a week and see what the lay of the land's going to look like.
But, Jack, I don't really understand why the market was surprised by this. I mean, I know even leaders were surprised by, I guess, the severity of some of the restrictions because of the number of infected cases, rose so rapidly. But we weren't really expecting a vaccine in November, and we knew that, the virus would come back in some shape or form.
Yeah, I think I think there's a difference between the rhetoric and what we've heard versus actually seeing the data. So I do think, as we start to see this crackdown in Europe, where you could argue, for the most part, with the exception of maybe certain travel, the lockdowns and the restrictions were handled better than some other parts of the world, particularly the United States. And so I think where we start to see problems there, we're going to turn to ourselves and say, this is what, the U.S. is going to look like in about 2 weeks.
Okay, do you worry about central banks not having, the firepower to deal with it, or do you worry about too much debt creation if there's more government support?
So a piece that I published yesterday takes a much bigger picture that looks at this, but I think a secular shift that will likely go on, moving away from monetary policy toward fiscal policy instead of investment-led trickle-down strategy. We're likely going to move to a demand-led trickle-up strategy. And it's interesting if you think about the comparison between Jimmy Carter and Donald Trump. Both incumbent presidents, first term, have very low approval ratings and could usher in a wave, just like what Reagan did with Volcker on the monetary side. Potentially, we could see Biden and company move in a blue wave and shift to this demand up strategy, which could take us just like, for the next 30 or 40 years.
Jack, one more question in the busy news flow today. When we have these distractions, what does it do to the valuation, the ratios of revenue? We've got big tech earnings today. Are they ever more valuable with their revenue growth versus everything else, given these distractions?
Yeah, they are, but it's a story that's been told. That's the problem. They're perfectly positioned. I will say certain B2B companies, Microsoft, while they beat revenue, projected out tepid forecasts. So on a B2B side, there could be some uncertainty, but direct to consumer, all of the stuff, stay at home stuff, absolutely. But that's been pretty well beaten. All of that's everyone who wants to invest in it is probably already in.
Jack Ablin, thank you so much. Too short a visit. He is with Crescent Capital and also has the coolest background of anybody we've interviewed since February. The background, Jack, is stunning. That's just great what you've got there. Jack Ablin, thank you so much. Futures up 21, Dow futures up 133. On Balance of Power today, an interview with the Speaker of the House. She's been very visible, and she's made clear with a Democratic win in the House, she wants another 2 years. Weston with Pelosi 5 days out. We continue to monitor France and the travels of Mr. Macron. We're waiting to hear on how Mr. Macron will address the murders in Nice. Stay with us. This is Bloomberg.
Okay, ladies and gentlemen, I'm placing an order to sell short British pound. The price I'm looking to get the pair for 130.24. 130.024. So if it will reach this level, I will sell short British pound, but it's look like it moved too fast, too far. Let's see for a couple of minutes how it's going to be.
The American Resiliency Relief Program was created to support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
Just days away from the most critical election in U.S. history, and it's only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. Another takeover in what is already a record year for the chip industry deals. Bloomberg's learned that Marvell Technology is nearing an agreement to buy Infi. The price is about $10 billion. Marvell will pay 60% of the price in stock. Infi counts Microsoft and Cisco amongst its biggest customers. Samsung Electronics is warning that earnings in the current quarter will decline. The world's largest maker of memory chips and personal electronics blames that on intensifying competition and weakening demand. In the third quarter, Samsung said net income rose a better than expected 52%. And Ford is riding a wave of momentum from new models under new management. The automaker easily beat expectations with third quarter earnings. Profits were driven by demand in North America for pickup trucks. Overseas markets are still a drag for Ford. There were losses in China and Europe. Still, the company now expects to stay in the black this year. Now, that's a reversal from an earlier outlook. And that's your latest Bloomberg Business Flash. Tom, Francine.
Rika, thanks so much. Now, first of all, let's do a data check, and then we'll, of course, bring you up to date with that developing story in Nice, the south of France. Now, overall, the market is looking at the extra lockdowns, the extra restrictions, because of the number of infected cases of COVID-19 is significantly on the up. I'm looking at European stocks. They're rebounding. Gains modest. Real estate and technology shares are leading this broad advance, and that was, started at the open. And then, Tom, I'm looking at treasuries and European bonds, and they're pretty much holding steady.
On the data, it's no question about it. We've seen the rebound and some real stability here as we get the news flow through the day. Again, technology earnings this afternoon will have complete coverage on Bloomberg. I will note oil having a particularly difficult day. We have a 35 handle on West Texas Intermediate. With these killings in Nice, we are thrilled to announce in moments we'll have with us Jonathan Fenby of T.S. Lombard. I consider his one volume on France to be the definitive modern edition. Jonathan Fenby on the challenges of all of France. We do that next. This is Bloomberg.
After 9 years at the helm of the world's largest wealth manager, Sergio Motti is handing over the reins. On his last week as CEO of UBS, I spoke to him about overhauling the lender, taking risks, and what it takes to be one of Europe's longest-serving bank CEOs.
It's not about beating somebody. It's about doing the best for your clients, doing the best for your shareholders.
Catch my interview with the outgoing UBS CEO, Sergio Motti, this Friday.
Well, I have to remove the order because it moved too fast. Okay, let's wait for better time.
Clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Good morning, everyone. Bloomberg surveillance from London, from New York. We're monitoring events in Nice, France. We'll have that for you here through the morning. We're juggling all sorts of stories, including the ECB meetings coming up here with a time change for the United States, different hours than we're used to, and also technology reporting this afternoon. Daniel Flax has a certain acuity out of Dartmouth. He's at Neuberger Berman. As a senior research analyst, we're thrilled he could join us today on Apple, on big tech. Daniel, the revenue growth that they have seems to be the constant and continued feature. How is the valuation or the treatment of the expectation of revenue growth changed for these companies in the last...
With each passing 90 days, and really as we look out to the next 12 to 18 months, is that technology has never been more essential in our lives. For work, for learning, for play, everything. And so what Apple has been able to do, and others like Google and Amazon, is really help people navigate and ultimately flourish through this time. So what we'll see, I think, from Apple later on is a broadening of these growth drivers. iPad, Mac, services, I think, will be strong. And then, of course, we have the 5G iPhone cycle, which is only just getting going.
Let me go gloom on you. I don't think Charles would want me to do that over at Neuberger Berman, but Daniel, I'm going to go all gloom on you here. Are they pulling forward revenue from 2021 or post-pandemic?
Tom, I don't believe so. And part of it, if you look at the iPhone, the smartphone market has been under pressure. And so the iPhone business has done quite well, but the environment's difficult. I think what's important for the company, and as we look out for next year, it's about the product cycles. And if Apple is able to execute on their product cycle, in the case of iPhone with the 4 new devices, that should drive better growth for iPhone over the next year. But remember, of course, the holiday season, the devices aren't all out yet, and so we'll have to see. Some of what might typically happen in the fall could actually get pushed into next year.
Daniel, we had the testimony yesterday. I have to say, apart from the very big distraction, that was the Jack Dorsey beard, what did you actually learn about the appetite of regulators to try and break up or regulate these companies?
I think the focus on the regulatory and dynamics of all this is critical. I think it's going to be part of the story for a long time. What we saw yesterday and what I think we'll see in hearings going forward is really the governments and the regulators trying to better understand these companies and these business models. I think what the companies need to do is really be more transparent. There is no silver bullet to solve a lot of these issues, Francine, but I think what has to happen is more engagement, more fluid frameworks in terms of how the platforms respond. But ultimately, the platforms are about trying to connect people and empower people, but it certainly needs regulation. I think that's going to be part of the story and a risk, if you like, for these companies.
But at the end of the day, will they not actually be regulated like newspapers? Are they not publications? I know there was so the New York Post can't have a Twitter account, but actually some other things about the Holocaust can. I mean, it's confusing and frankly just in a lot of times doesn't make sense. Why are they not treated like a newspaper? Why are they not treated like a publishing company?
I think they do need to be treated in many respects like some of the existing platforms. You mentioned a newspaper company. However, a lot of what's coming is user-generated content. And so the key is, how are you able to put safeguards in? How are you able to improve the security? And that we all appreciate needs a combination of artificial intelligence, people ultimately, but given the exponential growth and in some sense the fragmentation within these platforms and beyond them, it's very, very fluid. And so the regulations and whatever laws may get put in place, as we appreciate, might be different in the United States than in other countries as well. So it's fluid. I do think more oversight is needed, but I think these frameworks and these regulations need to be living and breathing, as it were, just given how quickly things change. And that ultimately is a challenge, but one that all of us as a society need to embrace.
Thank you so much. Daniel Flex, greatly appreciated. Too short a visit here, and of course, important earnings this afternoon. Joe Weisenthal and the team will have coverage of that here this afternoon on Bloomberg Television. Right now on Nice, and our first word news, here's Ritika Gupta.
Thanks, Tom. Starting off with that, authorities in Nice, France are calling it a suspected terror attack. 3 people were killed in a stabbing at a church. Police say the attacker was arrested. He was injured in the arrest and was taken to a hospital. France is on high alert right now for Islamic extremist violence. There have been 2 recent attacks linked to tensions over published caricatures of the Prophet Muhammad. And it's the 5th time this year that Louisiana has been hit by a tropical storm. Zeta came ashore there as a hurricane and battered New Orleans before heading into Mississippi and then Alabama. It's now been downgraded to a tropical storm. About 2 million people are without power today. At least 1 person was killed. In Germany, Chancellor Angela Merkel has defended her decision to once again severely restrict movement. She told Parliament the country is in a dramatic situation with the rapid spread of the coronavirus. Starting Monday, Germany will impose a month-long partial shutdown. And Taiwan has achieved a different kind of record involving the coronavirus. The country has gone 200 days without a locally transmitted case. Overall, Taiwan has had 550 cases with 7 confirmed deaths. The island has relied on strict border control, contact tracing, and masks. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. There are crisis meetings in Paris right now on the killings in Nice. This is to the south on the Mediterranean. Coming up, we'll have Jonathan Fenby with us at T.S. Lombard, and of course, his 1-volume France, A Modern History from Revolution to the War with Terror is my required read on the nation. Next, on Nice, Jonathan Fenby. This is Bloomberg. Good morning. Good morning, everyone. Bloomberg surveillance from London and from New York. Futures were up more earlier, up 24. We're now up 19. There is a better feeling in the United States, 39.19. In Europe, it is a Europe of pandemic, with Ms. Merkel speaking a bit ago. It is a Europe looking at difficult financial statistics. And Francine, it is a Europe again confronting death and murder in Nice.
Well, Tom, we found out, of course, about this attack in Nice about an hour ago. What we know so far, and again, we're still trying to get to the bottom of it, so we have to be very careful. What we understand through Associated Press, and I'm also reading a lot of the French newspapers, is that an attacker armed with a knife killed 3 people at a church in Nice. Now, we also know that the attacker was believed to be acting alone. That's according to 2 police officials, again, according to AP, and the Anti-Terrorism Prosecutor Office opened an investigation into the killings, but for the moment, we don't know much more, Tom.
It is a single 1 volume, and it is the book that I throw at Americans and say, shut up and read it on France, because it's a France so few of us really know. Jonathan Fenby, of course, writing for years at The Economist, and any number of books out, including his expertise on China. We're thrilled that Mr. Fenby could join us this morning on the terror in Nice. Jonathan Fenby, Mr. Macron and his prime minister are in emergency meetings, and they must right now deal with the divide of religion and faith across this nation. What would you expect to hear from Mr. Macron?
Well, I think Macron will stand firm. Of course, this also comes at a time when France is reeling from increased coronavirus deaths and outbreaks there. Macron will certainly stand firm against terrorism, against extremist views, as he has over the last month or so. And this is really becoming a challenge, not just for him personally, but for the whole French state and the way it operates.
We have in America, Jonathan Fenby, I would suggest, a completely amateur view of the Muslim experience in France. We go back to Algeria of the 50s, and maybe we fold in de Gaulle or some of those responses. What is the present state of the Muslim mind in France?
Well, there is a very large Muslim population in France, estimated at around 9% of total inhabitants of France. And the people who have carried out these terrorist attacks recently, and there was one in Nice, of course, 4 years ago, which killed 86 people, they are a very, very small minority. But one of the basic problems has been that a lot of immigrants, a lot of whom are Muslims, and the young people in particular, feel alienated from society. And that has been a major issue in France that I've charted for 30 years or so. And it has now reached the point of extremism, as we've seen in the last weeks.
Jonathan, good morning from London. So we know that the French President Emmanuel Macron is heading to Nice a little bit later on. But at this point, what can he actually do? Why is there more of a problem like this in France than in any other seemingly European country?
Well, I think the extremists who carried out the terrorists, they see France as being a symbol of, if you like, Western domination, and they get this obviously draws on the colonial experience of France, particularly in North Africa. What Macron can actually do now will be almost certainly to step up security precautions, but of course the difficulty of acting in advance against a single killer, as appears to be the case there in Nice, is enormous. And I think we're going to have a period of continued high tension in France for weeks and months, and perhaps longer to come.
Is this a political opening for Marine Le Pen? And, you know, if President Macron doesn't handle it right, will it cost him the presidency next time around?
Well, Well, yes, I mean, it may seem not the right moment to talk about these kind of domestic political calculations, but it is very likely that at the next presidential election in a couple of years' time, Macron's main threat and main challenge, again, will come from Marine Le Pen on the further right of him. And he has to, not just for electoral reasons, but also because for the health of society, he has to reassure the French that their state is still able to protect them and deal with outrages such as we've seen with the killing of the teacher and with what happened today in Nice.
Jonathan Femme, Dr. Kissinger once told me that there is no other issue as Europe confronts immigration, whether it's in Nice or a boat capsizing off Dunkirk a few hours ago, a day ago, I say, with 4 deaths, including children. It seems to be an intractable issue. What can be the proper public policy?
It is almost, I'm afraid to say, an intractable issue. If I knew an answer to this, Tom, I'd be Prime Minister or doing a more important job. The difficulty basically is that Europe has not wished to come to grips with the issue of immigrants and immigration and society for the last 30 years or so. The immigrants were very useful and still are extremely useful from an economic point of view, but also socially are not integrated very much in society. And one has seen, in fact, the opposite of integration going the other way in France over recent years. And this will be a long, long job ahead.
If you were to write an epilogue now to your wonderful book, Jonathan Femme, what would you say of the state of society in France given these terror attacks?
Well, I think the society in France is becoming more fragmented, more fearful, and therefore less and less of the cohesion around the state on which France has based itself.
Jonathan, thank you so much. Jonathan Femme, they're author of several books, including France, A Modern History from the Revolution to the War with Terror. Now, coming up next, we talk about COVID-19 with Jason Farley. He's Johns Hopkins nursing professor. We talk about, of course, a number of cases increasing in Europe, the lockdowns, the restrictions, and we also looked to the U.S. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We are all in this together. No member state will safely emerge from the crisis until everyone does.
What was the best strategy? Lock down the elderly, the most vulnerable, test, alert, protect. None of that is sufficient in the current situation. We need to take it further.
We must act now, as we have done without hesitation. Obviously, they were painful choices. Because there is no restrictive measure that has no impact now.
We know now that we need to reduce contact again, and with this, lower the risk of infection. Because of this, we need another national effort for the month of November.
European leaders are tightening virus restrictions as cases continue to surge across the continent. Now, as we continue to track the virus, Bloomberg has, of course, developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Jason Farley. He's Johns Hopkins nursing professor. Jason, thank you so much for joining us. There's a lot of questions about antibodies, treatments, and of course the vaccines. But what are you working on at Johns Hopkins? What are the 2-3 things that you're trying to figure out?
Well, good morning. So we have, in my team specifically, we're really trying to understand the exact extent of this disease and the disparities amongst different people in Maryland. So really digging in deep and trying to figure out, who's impacted, how are they impacted, what are the psychosocial, the mental health, substance abuse impacts, but also looking at PCR and antibody status on all of these patients over a long period of time and see how that impacts everything from their healthcare engagement to their financial situation. We also have teams of scientists working on both therapeutics, vaccines, as well as antibodies.
Jason, until we understand why this virus affects different people that look on paper maybe having the same profile, will a vaccine actually work?
I think it's an excellent question, and we must realize that what we're trying to do is use the exact same strategy in every single person. And so obviously, our immunologic responses, the ability to produce antibody, for the majority of people will be similar, if not the same. But there will be people who are always outliers. There'll be people with different, receptor types, people with different responses, who develop slightly different flavors, if you will, of vaccine response. And so certainly the fact that we've got, 6 or 7 candidates that are nearing, definitely enrolling patients in phase 3 studies is really critical.
Jason, what can you tell us about what type of lockdown works? It seems that, Europe, much like the U.S. in certain regards, is divided on whether lockdowns work or not. What can you tell us?
So I think most importantly, there is clear data now. There are, if you look to the north of the United States and Canada, there are multiple Canadian provinces that literally have 0 cases right now. Now that's multifaceted, right? There are some are in low population densities, but not all. Obviously, Nova Scotia has some larger cities. But what they have done is just really, really practice, I wouldn't say the word extreme, but tight control of the virus. Social distancing, businesses closed, areas in which people combine together are not operational. And now multiple provinces in Canada, for example, have joined a single, area that is a COVID-free zone and allowing people to travel across these 4 provinces, but not from outside of those. So I think we really need to take the local epidemiology. It is painful, unfortunately, until we get a vaccine and an effective therapeutic. And obviously, loss of income and business must be taken into effect. But we have to stop these surging cases because they will stretch our hospital capacity and we will see more lives lost.
But Jason, I thought we were getting much better at treating it. So either through antibodies or drugs or just, knowing when to ventilate people.
or not. But then when you listen to leaders in Europe, Emmanuel Macron of France, Angela Merkel of Germany, they say, again, it's overwhelming and it's becoming too dangerous for our national health services. How do you square the two?
Yeah, I mean, it's an excellent point. And the issue is that the therapeutics and that we have right now, whether they're steroids or remdesivir, or in some cases antibody, although we've recently gotten negative results on the Eli Lilly antibody, and that drug's shown to be ineffective in hospitalized patients. We're learning more and more, and each of the therapeutics help some, but they're no holy grail. And so when you see capacity surge and ICU beds taken and ventilator capacity reached, you then have to use other types of wards and units that are less well equipped for supporting critically ill patients. That increases the risk of mortality just by the system itself, irrespective of any therapeutic benefit. So you have to look both at the therapeutic benefit and the small margins that we get there. Then you have to look at the capacity of the health workforce and the system. And as we get into lower levels of care with sicker patients, that mortality may rise. So what they're trying to do is balance the data around small benefit in mortality and morbidity from the therapies with the rising case numbers and trying to mitigate so that the healthcare system can keep up.
Thank you so much, Jason Farley there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information on COVID-19. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, be sure to catch coverage of Christine Lagarde's press conference for the ECB. It's, of course, decision day right here on Bloomberg TV, and that press conference begins 1:30 p.m. in London, 9:30 a.m. in New York. Now, this is what we're looking at. European Central Bank officials, of course, must decide on Thursday, today, whether the renewed wave of coronavirus infections and lockdowns on the continent require an immediate dose of extra monetary support. It's a tricky balance. We've heard it from policymakers. Again, meeting the ECB just hours before Germany and France introduce these tough new restriction measures. This is Bloomberg.
valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
It doesn't really matter who's elected. I think the market is heading higher into next year.
We could be in for, a prolonged correction.
The services part of the economy is really in trouble.
What we need is central bank keeping stability in financial markets.
The longer we wait, the bigger that package will need to be.
It's clear that we are going to see downward revisions in many businesses. The question is how strong they are.
It looks like we're heading towards a double dip. I think that's increasingly likely in Europe. In the U.S., we might still have a fighting chance.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Equity futures bouncing back up 20 points on the S&P 500. We advance. It's a muted bounce after a big loss in the last 24 hours. The risk aversion starting to come back through slowly, Tom, through Forex.
It is. In the last hour, we've seen it. We've seen the ebb and flow. We watch yen and euro Swiss, a strong Swiss franc, strong yen here, reaffirming this morning. I would say, John, we're really right now on this radio and TV simulcast in a major state of flux in terms of market dynamics.
And the tension in Europe, that continues to build. The lockdowns, if we can call them that, in the last 24 hours, versions of them in France and Germany. And then the news out of Nice, France, Tom. French anti-terrorism prosecutors investigating a knife attack at the Notre Dame Church in Nice. A developing story. I want to stay away from the speculation and stick with the facts, Tom. We're learning very little at the moment about what's happened here in the last couple of hours.
It is an overlay on the pandemic. We just spoke with Jonathan Fenby, of course, his wonderful one volume in France, I consider definitive, is a good background read. John, you've lived this on the continent of Europe. Of course, the boat capsizing in the English Channel a day ago with 4 dead. I mean, immigration, John, it's different over there. The social tensions are different than America, aren't they?
It is, but the social tensions in France are very unique at the moment around Islamic terrorism. And the weekly satirical magazine, if we can call it, Tom, the cartoon that Charlie Hebdo produced, is causing more tension once again in France. And we've seen this movie far too many times. And unfortunately today, Tom, we're seeing another version of it.
Yeah, right now, John, we see and we await Mr. Macron's comments. I believe the mayor of Paris spoke moments ago, but certainly the nation awaits Mr. Macron in some form of strategy. Fenby called it an intractable issue.
No doubt Ridhika Gupta will get you up to speed on the first word news a little bit later on. I want to stay on top of the market action, Lisa Abramowitz, of the last 24 hours. Absolutely remarkable to see what's happening with the equity market. A real wake-up call to the happy talk about a recovery and the potential of a double dip in the European economy.
Yeah, and it really had to do with the idea of renewed lockdowns, renewed shutdowns. And you pointed out earlier this morning oil and how it's breaking down to the lowest levels since June. A lot of this has to do also with China saying it's going to reduce its emissions longer term, but also this idea of a lack of mobility. Today, a huge data dump on a number of fronts. Let's start with the main focus. 8:30 a.m. We've got U.S. third quarter GDP. You will talk about how it shouldn't be annualized. It will be a huge number of a rebound, yet we are still on track for the biggest yearly contraction since the Great Depression. We're also going to be getting initial jobless claims, that unemployment backdrop really fueling some of the tensions you were talking about. Then 8:45 a.m., we get an ECB rate decision followed by the ECB president, Christine Lagarde, talking about possible additional measures, a real focus on what more they will be willing to do given the fact that there are these renewed shutdowns. What more can they do, especially as people look at this being a fiscal issue, no longer a monetary issue? And then after the bell, the tech bonanza, we've got Apple, Alphabet, Facebook, and Twitter all coming out and giving their earnings. Different issues here. We're going to be looking at ad spending. That will give a read on how the economy is doing for the likes of Facebook and Twitter. And then with Amazon, the question is margins, right? They're going to be spending so much money to keep their business going in such an uncertain climate, John.
Lisa, thank you. Here's the price action this Thursday. Let's whip through it and get straight to it. What a busy afternoon that's coming up. Stateside, as Lisa has run you through it. Huge amount of earnings coming up. Futures set up as follows. S&P 500 futures up 20. We advanced 0.6%. News a few hours ago in Europe. LVMH and Tiffany's, they've agreed a price, a new price, 131.50. The previous price, 135. That's a saving of 425 million for Mr. Arnault over at LVMH. We'll talk about that one a little bit later. Outside of all of that, in foreign exchange, euro dollar 117.19. Thomas, interested to see what's happening in foreign exchange over the last couple of hours. I woke up this morning to some dollar weakness. That's turned into dollar strength as this session has grown older. Euro dollar just south of 117.20 there.
John, I'm bringing up yen here to see if we get a 103 handle. I don't think we're there yet. Let me see. No, we're not there yet to a 103 handle on yen, but definitely stronger yen. It does show some of the tension. There is, I don't want to oversell it, John, but I'm going to call it a modest flight to quality. And, John, look at oil. What is oil pricing in?
Total puke in the last couple of hours on crude. Saw that in Brent and WTI. Equities in Europe just haven't generated a bounce this morning.
Yes.
The DAX up by about 1/3 of 1%. The FTSE 100 up 1/3. The Euro Stoxx 50 is negative, Tom. After a really ugly start Monday, Tuesday, Wednesday, we just haven't seen that enthusiasm this morning over in Europe.
John, we have in Nice what Mr. Macron will say, and we have in Frankfurt, what will Christine Lagarde say about these many distractions?
Huge pressure, huge pressure. Typically what the ECB likes to do is produce something new when they produce the new forecast. The new forecasts don't come until December. I think it's inevitable those new forecasts, Tom, have to get downgraded. It's up to the ECB whether they want to get out in front of that. Most people you'll speak to will tell you no. I think there's still huge pressure on President Lagarde to make sure that financial conditions in Europe stay super loose as we enter a really tough part of Q4.
Yeah, John, why don't you bring in Evan Brown here? He's been patient with this just terrific news flow.
Very patient, Evan Brown, a UBS Asset Management Head of Multi-Asset Strategy. Evan, great to catch up with you, sir. Do you think the risk-reward in European equities is starting to skew towards a little bit more reward, given the sell-off Monday through Wednesday?
I do think so, yes. I mean, there's no question that Europe is facing a lot of headwinds. We're repricing the growth outlook, and that's problematic. But at the same time, you know, when we look out, I think what we're going to see is, you know, positive vaccine news coming soon. We're going to see, all the news right now is on targeted restrictions, lockdowns, but ultimately these bear fruit, right? We're even starting to see it in Ireland right now. So a week or two from now, I would suspect that case growth, which is surging right now, starts to stabilize. We've seen it in countless countries, right? There are behavioral changes. People wear masks. People, you know, are focused on not having these super spreader events, and that moves down the caseload, and then that's typically when markets start to rebound. They see the light at the end of the tunnel. So I do think we're approaching a buying opportunity in European equities.
Evan, the happy talk here is stochastic, which is Greek talk for pointy. Okay, great. We've had pullbacks here that have been pointy. I'm not going to get out the dates right now, but every time we go down, we come right back. Does this downdraft indicate the same kind of treatment?
I think so, yeah. I think that, you know, right now we're kind of in this air pocket, right? In the fourth quarter where we know the news on COVID is not great. We know that we're going to have to wait a bit for U.S. fiscal policy, right? We know we're not actually getting the vaccines for a while. And so what we have to go through into a brighter first half of 2021 is kind of a softer fourth quarter. And so it's really the ability of the market to not fully look through, but acknowledge the weakness right now, knowing that there are better days ahead. And you know, the market is forward looking. So I would suspect, you know, the repricing we're seeing right now is a reaction to what's going to be a weaker fourth quarter, but very soon, you know, the market will look forward to better days ahead.
Evan, what would you have to see to rethink your position that brighter days will be ahead for markets, not just the economy?
Yeah, so a few things that we're looking at. Clearly, in Europe, we want to see those caseloads stabilize, right? We want to make sure that
this is following the playbook of what's happened in other countries. If it's because of the weather or other reasons and cases continue to surge in Europe, then that's an issue, and then we'd have to reconsider. We're watching credit very closely. Like I said, there's kind of this air pocket. It's really unfortunate that we didn't get pre-election fiscal stimulus. It's really unfortunate that we can't really count on anything in the lame duck session. And so credit will really tell us, like high yield credit will tell us if companies are going to be able to make it through and avoid defaults. And if consumers, they are going to be able to adjust, still have enough savings that they can still spend in the fourth quarter. So we're watching both financial market indicators and also the coronavirus data.
Arguably the pressure point for the Federal Reserve as well. High yield spreads yesterday out by about 20 basis points. Not at that point yet where I think the Fed's going to be too concerned. Where I think it's always interesting, Evan, is not just the news alone, but how the market responds to the news. Tech, the worst hit sector in yesterday's session. Evan, what did that tell you?
Yeah, that was quite interesting, because you'd think the narrative is that coronavirus concerns are driving everything, but if that was the case, you would expect that tech would hold up reasonably well relative to, say, value or more cyclical sectors. But NASDAQ was the worst performing U.S. index yesterday, and so that was a bit puzzling. I think what may be happening here is just this underlying. Hey, we have an election in a few days. We have what's the most likely outcome, which is a blue wave, where you're going to have, I think, policies that are less friendly to tech on a relative basis to the more cyclical stuff. So if you get that blue wave outcome, yields are going up. It's going to stress the longer duration growth plays. You've got tax increases, which are disproportionately going to hit technology, healthcare, and the like. You've got, as well as capital gains taxes. So I think there's still that underlying anticipation where people don't want to be too overweight tech ahead of that potential election outcome.
Evan, great to catch up. As always, come back soon. Evan Brand there of UBS. Just want to bring you some news from United Airlines very quickly. How do you live with COVID-19? For the corporations in the airline business, they're trying to lead the way here. This from United. They plan to offer a Newark-London virus testing pilot scheme as a tool to spur travel. This will run from November 16th until December 11th. And they're hoping, Tom, that if they establish this and it works well, it should lead the way to ease quarantine rules. This corridor, super important to these airlines, and the airlines are trying to do something about it.
We're not making light of anything today, folks, with the news flow that we're seeing on the pandemic and, of course, the sadness in Nice. But, John, you could call this the Faro plan. You have been way out front, and maybe it's the way you're living it, taking the surveillance Gulf Stream over to London and all that. But this is a really big deal, John, and to me, it's a simple solution. That's what I don't understand.
Well, I haven't kept it a secret. I've clearly got skin in the game, and I hope this happens, Tom. But I think for the airlines, they don't want to get bailed out. They want to operate again, and this could be a big part of that. Much more still to come on this programme. Alongside Lisa Abramovitz and Tom Keene, I'm Jonathan Ferro. Coming up, Mike Collins, PGIM Fixed Income Senior Portfolio Manager from London and New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Authorities in Nice, France are calling it a suspected terror attack. 3 people were killed in a stabbing at a church. Police wounded the attacker while arresting him. He's now at a hospital. France is on high alert right now for Islamic extremist violence. Last month, the terrorism trial began in the 2015 killings at the satirical newspaper Charlie Hebdo and a kosher supermarket. Hurricane Zeta has weakened to a tropical storm as it heads through the southeastern U.S. It battered New Orleans, left 2 million people in the dark, and led President Trump to declare an emergency for Mississippi. Zeta was the 5th hurricane or tropical storm to hit Louisiana this year. And LVMH has agreed to buy Tiffany at a reduced price of almost $16 billion. The French luxury conglomerate will get a $425 million discount from the original price. The agreement ends a year-long saga involving a war of words, French government intervention, and lawsuits in the U.S. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Retail, I think, is strong. We see a lot of people ordering online or going to the grocery store and buying and eating at home. We just don't know what restaurants are going to do this year in the state of Florida, which is the largest consumer of the crab.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Governor did a good job. I don't know if you appreciate it, but he did a good job. You had a spike, and he just sort of did what he had to do, and your state is fully open.
Folks, we've lost more than 220,000 lives of this virus already. But this administration has just given up.
Trump at a rally in Arizona and Vice President Biden in Delaware with just 5 days to go until the U.S. election wraps up. From London and New York this morning, good morning. Let's get back to the Thursday morning price action, shall we? It shapes up as follows. Monday, Tuesday, Wednesday, rough in Europe. And some of that continues. Euro dollar just about holding on to a 117 handle, down 0.25% on the session. The bond market unmoved. We can talk about that with our market participants on this program a little bit later. 0.77 is your yield on a 10-year. And futures just with a little bit of a bounce, Tom. Equity futures up 12. We advanced 0.4%. I think the key comes a little bit later after the close. Elisa pointed it out. Big tech, all reporting. Alphabet, Facebook, Amazon, Apple, all at once after the close this afternoon.
I do not disagree with that. Oil near a 35 handle. I'm watching Japanese yen 104.11, a 103 handle stronger yen would be important. In the news flow, and again, we're watching the news flow of Mr. Macron, France, and Nice, is Washington and an election. Kevin Cirilli is our chief Washington correspondent. Kevin, Mike Allen lines up the ducks today. It's numbers that are commonly known of rising cases, infections of the pandemic. And state by state, doesn't even matter what the name of the state is. The answer is these are not good double-digit case growth numbers. How do these two candidates deal with the gamma, the acceleration of cases this morning?
Yesterday, when I was speaking to sources on the president's re-election campaign, what they told me is that there's an understanding that one of the hurdles that they have not been able to clear was this notion from Democrats that the pandemic cases in the United States is a unique situation. You look at Europe, you look at what's happening in Germany, a progressive country. You look at what's happening in France, a progressive country, where you have upticks in cases, where restaurants and bars are having to reclose as a result of this. I mean, the virus from a Western Hemisphere perspective has had a somewhat similar response throughout Europe as well as the United States. Republicans have failed to clearly articulate that message on the campaign trail.
What would Mr. Biden do different the first day after that inauguration? For that matter, after lunch of the inauguration?
Well, by design, he has not said as much. I mean, all you have to do is focus on Pennsylvania, a key battleground state. Hop across the Commodore Barry Bridge to Paulsboro, New Jersey, a refinery in New Jersey, which has just laid off 250 employees in terms of the fracking issue. And so that in and of itself, coupled with what you're seeing in the unrest in Philadelphia, there's dynamics in Pennsylvania right now that are really unclear variables. You look at the Reuters Ipsos poll where he's up by 5 percentage points, just outside of the poll's margin of error. There's some variables in Pennsylvania that will be fascinating to watch on election night and the days that follow. Speaking of Pennsylvania, I would note the Supreme Court failing to take up a case yesterday, even with Judge Amy Coney Barrett on the bench, failing to take up a case yesterday that says that they will not touch what Republicans want in the state, which is to be able to count ballots if they are mailed in after Election Day. That's crucial in the uncertainty coming in next week.
Kevin, that is exactly where I was going to go. This Supreme Court ruling, not only having to do with Pennsylvania, but also North Carolina, and it kind of goes counter to what the ruling seems to suggest in Wisconsin. How big of a deal is this? Basically, they will accept and count absentee ballots received after the date of the election.
Well, it's massive. It's massive in terms of the volatility, especially if you're an investor and you're trying to figure out when we could actually have a result. As a result of this case, then they will continue to count ballots. How long will that take? If there's a razor-thin margin, Lisa, as you just correctly pointed out, in a state like Wisconsin, all eyes will be on Wisconsin. And so the media cycle, the media circus will be very much, a dynamic that will all be unfolding if it's a close race. Keyword if.
Well, Kevin, a question mark as to who this affects most, because the Democrats were already concerned about this issue, and I wonder if that's helped drive some of the early turnout.
Precisely. I mean, when you've got upwards of nearly 80 million Americans already having cast their ballot, I mean, this is, how they're going to be counting that. And the patchwork, really, of the count, the specific count in states like Florida, which is different in terms of how they count ballots than it is in Michigan, than it is in Wisconsin. I mean, it's going to be remarkable.
Kevin, I'm not trying to be smart here. You're exhausted. You've been doing this for months and months and months in the campaign. Let me ask you the question that matters. Kevin, do you believe the polls?
No, not at all. No, to be blunt.
I'm asking.
Simply because they don't have the best track record. You know, I think there's a difference between a pollster and a reporter, and I think the problem with pollsters is they haven't been to many of the parts of the country, and they don't really understand the psychology of what's happening. For example, in parts of Wisconsin or parts of Pennsylvania, they don't really understand. They're looking at the average voter through the prism of cable news, and I would be very cautious in terms of doing that. I think there's without question a clear advantage based upon the data, the hard data, which has come in from the early voting numbers, from turnout in terms of demographics and geographic parts of the state, which typically have demographics that are more progressive. And I think that data shows that Joe Biden has the upper hand in terms of turnout coming into this election. But does that data drive Republicans to the polls? That's another unknown variable.
Kevin Cirilli, great to catch up, sir. Bloomberg Chief Washington correspondent. This thing wraps up maybe, Tom, in 5 days. The emphasis on maybe.
Yeah, maybe.
And that's the word that this market's been grappling with for the last couple of months.
No question, maybe is it. And, we do it with a movable feast. I don't suggest that what we see in Europe will fold into the huge domestic debates that we see in this election. But, John, I can't even tell you where we'll be tomorrow night, let alone where we'll be Tuesday. That's how fast events are moving.
Yeah, I can't either, but I think the COVID cases increasing, Tom, are significant. I think that for this market, it seems to only be responding to restrictions that come from governments in France and Germany. But what was interesting about Germany is that consumers started to disengage before the restrictions came through. That's really, really important when you start thinking about what's about to happen in the United States as we get deeper into winter, as those cases pick up again. Even if there's a higher tolerance for higher cases because of hospital capacity and treatment, if consumers respond to that higher caseload by disengaging, that will have an economic impact. And arguably, we've already seen that in Europe before the last 24 hours even happened.
Well, we see the big bounce GDP statistics today, and maybe that will be there, and that will drive forward the conversation. We have Lagarde at the ECB. John, our reporting across all of Bloomberg is that Mr. Macron is flying to Nice right now. No surprise there. We do not have a time when he will speak to the nation.
Following reports of a knife attack in the coastal city in France at the Notre Dame Church. Looking forward to hearing from Mr. Macron a little bit later today. This, of course, this tragic event, just 24 hours after new restrictions coming through on Europe's second largest economy. The first being Germany, which Germany has also got a set of new restrictions as well, from Chancellor Merkel announced in the past day or so. A lot of focus on Europe, I've got to say. It's really hijacked the news flow in the last 24 hours and drawn attention away from an election that wraps up in 5 days' time. From London and New York, this is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
busy Thursday morning. Good morning to you all from London and New York. Alongside Tom Keane and Lisa Brabbitts, I'm Jonathan Ferro. 2 hours away from the opening bell in New York City. Let's get you up to speed on the price action. We have a bounce. It's a muted one. It fades as we get deeper into the morning. Up 11 on the S&P. We advance 1/3 in foreign exchange. Euro weaker. Dollar coming back stronger again. Euro dollar 117.11. And in the bond market, we'll talk about that in just a moment. Your 10-year yield 0.776%. That's the story of the market, the story of the last 24 hours. More restrictions in Europe, no stimulus package coming through from the United States, at least until after the election. This was the take from Bill Dudley, the former New York Fed Bank president.
Economy yet, because the fiscal stimulus was so great that it actually boosted household savings, and because the reopening that we saw in the economy in July and August and September actually also provided support to the economy. But now everything seems to be moving in the wrong direction, and I think that's really what the stock market's reacting to.
Tom Keane, that's certainly what the stock market's reacting to. Of course, Mr. Dudley added to that, the real concern is whether this Federal Reserve, Tom, has the firepower to respond to anything if the fiscal stimulus doesn't come.
I just take it to percent of GDP, John. You know, I'm not an expert at this, but I love the idea of saying 2 and 3% GDP was certainly comfortable for everybody in Washington. John, do you see in the literature you read anything that discusses 6% of GDP?
No.
I don't see it.
What are you talking about, Tom? Q4?
Q4 into 2021, third, fourth, fifth wave. Is there any? I mean, Lisa, I think this is so important, is the framework of a very selected few saying we're going to get out to $5 and $6 trillion, whatever the number's going to be, of aid. No one's talking that possibility, are they?
Yeah, people really relying on the Fed to come up with something, and yet it's very unclear what they can come up with, Tom.
Yeah, it'll be interesting to see. What we're going to do, because a huge news flow, is really get right to it with our guest today. We can do that with Michael Collins of PGIM Fixed Income Senior Portfolio Manager. Michael, I want to take the equity chat and bring it over to the adults in the bond market. That would be you. FOMO, fear of missing out. I mean, I'm deciding whether I got a window of opportunity to buy Apple Computer. With price down, yield up, do you have fear of missing out across the credit space?
Tom, everybody in the world has fear of missing out in the credit space, right? They're all flooding out of government debt and out of cash into the credit markets right now. We just got news overnight, life insurance companies in Japan are increasing their allocation to the U.S. credit markets. We are the last bastion of positive real yields in the world, and the money's going to continue to flow for years, and we're definitely in on that trade.
And John Ferro, you've been way out front in this, and then there is Italy. They did a pretty good offering today, which shows that fear of missing out.
Yeah, that demand came straight back in after a little sell-off yesterday and yesterday's session. And Mike, I think keeping an eye out on Italy is really, really important. Jury's still out as to whether we've made that full conversion to behaving like a sovereign. How dependent do you think that market is still on Christine Lagarde coming out with some very accommodative language a little bit later?
I think the peripheral debt and Italian debt in general is very reliant on continued fiscal consolidation, continued monetary policy support within Europe. That's a big part of our thesis, right? You wouldn't necessarily buy Italy or Greece, for that matter, based purely on the fiscal situation or on the economic growth projections. But man, the entire European bond market is coming together and behaving like one big government bond market more and more. So we think over the longer term, those yields are going to continue to compress toward each other.
So you're looking for some capital returns on the periphery then, Mike, because you're certainly not looking for the yield at 74 basis points over in Italy on a 10-year.
Well, the way you get the capital return is you short the bund on the other side, right? So it's a spread game, like everything we do and talk about in the bond markets, Jonathan, right? It's about the spread compression. We do not own treasuries by and large in the portfolios where we don't have to, and we are short things like bunds, and that's the trade, right? So you need to own the spread, and you're betting on that spread compression to get the capital gain.
Mike, you said that you don't own treasuries in your portfolio, and this, to me, is one of the most notable aspects of the sell-off we saw yesterday, and frankly, what we're seeing continue today, which is weakness in treasuries, even as stocks sell off. Is this sort of the moment of truth for treasuries acting as a hedge in a risk-off scenario? They no longer work that way.
I mean, if you can see the amount of chat and emails and research that we've done in the last 24 hours on that subject in our shop, Lisa, right? We've looked at betas and empirical analysis, and the zero lower bound is the problem, right? I was really concerned yesterday when the stock market was down 3% and the long bond was down half a basis point, right? So, I mean, I think that the hedging qualities do start to diminish for sure. We've been advocating to our clients, you don't want to sit in 60% stocks and 40% U.S. old-fashioned Bloomberg Barclays Ag, which is loaded with treasuries. That's kind of a losing trade. You have to be in the higher yielding credit sectors, which means your correlations don't work as well. They're not as negatively correlated in the past. But over the long term, that's the way to add value to your portfolio.
There's a conundrum here, though, because on a day like yesterday, that means just double losses, right? I mean, you saw credit, particularly riskier credit, which offers that spread, do that much worse because people are concerned that companies are going to go bankrupt with all of these shutdowns. So what's the hedge?
Yeah, that is a real tough one, right? And I think the hedge is you do not focus on the day-to-day wiggles, the week-to-week, the month-to-month movements in your portfolio. You say, all right, how am I going to have the most money in my pocket in 3 years from now, in 5 years from now, in 10 years from now? And you build your portfolio that way. That being said, the credit markets, by and large, Lisa, have been really well behaved through this equity volatility, right? The credit markets don't necessarily care if the big high-flying tech companies get revalued at lower PEs. They don't care if the Democrats start breaking up the tech companies. You know, they don't care if corporate tax rates go from 21 to 25. We're kind of out of that fray. So
Michael, on a partial differential basis, looking at nominal yield dynamics, looking then at the break even, the inflation guess, and then finally looking at the real yield, which of the three are you going to look at? I guess we've got a technical issue right now. We've been challenged here with a call with Michael Collins of PGIM, so I think we'll leave it there right now. And we can do that because John Farrow, the news flow is extraordinary. And John, it does go to the real yield, which has shown some nice stability here in the last days of turmoil, negative 0.9253%.
Jack Dorsey called the control room to complain. For our listeners on radio who didn't see, Mike Collins' beard was just absolutely epic. So he cut the line.
Can you see me with a Dorsey, like a, you know?
I think it would be great, Tom. I'd love to see that. I can go through with the stubble, but you and the beard, get into the yoga,
I think it's
the
like a
meditation,
no-brainer.
a calmer Tom Keane. I would love a calmer Tom Keane. Wouldn't you love that, Lisa? A calmer Tom Keane with a beard, quite zen-like in the mornings.
Dorsey-like?
I'm sorry.
Shouting,
a beard would not make him
grumpy.
zen. It would not make him calmer. It would actually, he would braid it. I mean, it would be like there'd be bow ties in the beard. You know that there would be, too.
I'd be as gray as Letterman, and that's bad.
It would be like dreaded with different ribbons in it. It'd be lovely.
You know, Vet Bill and I were
watching.
watching.
Mike Collins of PGIM. Let me just thank him first. Mike Collins of PGIM, thank you.
We've moved on, John.
I want to get to the price action of the moment, Tom. This market is turning a little bit here. This DAX rolling over, negative about 1/3 over in Frankfurt, Germany right now. And if you pull up foreign exchange, if you've got the terminal sitting on your desk, if you're listening to this, WCRS Go gives you a quick snapshot of G10.
Let me try that.
Just see the dollar strength. The dollar strength starting to come back through G10 again. Bottom of the pile is the Norwegian kroner, down 1.41%. Top of the pile, as you might expect, is the Japanese yen. And we're starting to capture the risk aversion through foreign exchange. Kathy Jones out on Twitter this morning. The FX market, a better indicator of risk appetite. And that risk appetite, Lisa, starting to turn.
Yeah, this to me was the most fascinating aspect of yesterday, that treasuries were not a hedge to the equity volatility. The dollar was, despite all of these people coming out throughout all of this year and saying the dollar has lost its preeminence as the dominant currency in the world. It was the singular hedge yesterday and has continued to be, John. It's this irony of 2020.
I don't even know if it's ironic. I just think it's the likes of Stephen Roach putting out the same story over and over again, and nothing's really changed.
It's not just Stephen Roach. I know your feeling about Stephen Roach. But
it's him and others. It's him and others. I don't have any particular feeling about him. It's him and others putting out the same argument. Just let me finish quickly.
Carry on.
The cheat guide of foreign exchange has always been when things are good, when the global economy is picking up and risk appetite is buoyant, the dollar will be weaker. And when you turn that upside down, the dollar's stronger. And when things get bad and when things hit the fan, people buy the US dollar. And I haven't seen a change in that all year. We've had one of the biggest risk-off events in the last decade. And where did everyone go to? They went to the US dollar, Lisa.
The reason why I think this year felt different was because just how much money the Federal Reserve was pumping into the system, this idea that they were inflating the monetary base so dramatically that people were saying that they were going to devalue the dollar. And that was sort of this fear that seems to be growing in a lot of circles. And that is not being proven to be the case, John. And I think to your point, and you highlight correctly, that it has always been the same story, and perhaps it remains the same story.
Still the same, Tom. G10, dollar bid. Euro dollar down 1/3 of 1%.
Yeah.
I think the oil move's really interesting as well. Tom, you picked up on this. Crude, Brent, WTI. Norwegian kroner's capturing that. Norwegian currency down 1.5%. Story coming through crude is just not a pretty one at the moment.
Yeah, I'm really focused on crude, and I don't mean to be a sophisticate there. Javier Blasino that's going to help us with that. John, I must note Turkish lira, which of course is folded into the France debate and the challenges that they're having in Nice. Very weak yesterday, then stronger after Mr. Erdogan's comments, and reverses sharply today, rounds out to an 8.32. I would point out, John, 8.45 is a roughly 4 standard deviation move. We're not there yet. But all of a sudden, lira may be folded in to the politics of Nice.
That is a 6th straight day of lira weakness.
Yeah.
And the other thing you've got to fold in is just a lack of central bank credibility, Tom, and it just hasn't been rebuilt in Turkey.
Well,
and that's why the market seems to be confident just to keep pushing this and pushing.